instruments. Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1, verse 12. Blessed is the man who remains steadfast under trial, for when he has stood the test, he will receive the crown of life, which God has promised to those who love him. Philippians chapter 4, verses
Good morning, everybody. Hope you guys are doing well. What's up, Maddie, Tony, Avinity? What's up, bro? Let me see. It's good to hear, bro. Good job, Tony. Waiting for my payout. So $1,000 buffers. Yeah, beautiful. Beautiful. Yeah, there's really nothing wrong with taking one small withdrawal. But long term, I know it's good to get that withdrawal and whatnot, but long term, you want to make sure you have that buffer. Got to be able to limit the stress, essentially, right? So yeah, for anyone that is new here, anyone that watches this replay or is hopping on for the first time, what we do on this call is a Sunday prep call. Okay, we're preparing for the week. We're walking through a systematic, organized, repetitive process that we use every single week that has proven to be consistent over the last, 4 years that I've shown it publicly. About 6 years for me. I've been trading for almost, 7 years essentially in August. But yeah, so we'll go through every single one of these things. But this is pretty much what we'll cover, right? The topics in here we hint at, right? We go over, we talk about, we acknowledge. If you guys have any questions, obviously I'm here to help. This call is not only a weekly prep call, but it's also question and answer. That's why they go a little bit long. These calls could be a little bit long, but when it comes to the process, if you pay attention, take notes, you'll realize that, the process takes about like 20 minutes, right? If that. So, with that out the way, let me know if you guys can hear everything okay, see everything okay. Last week we had a mic problem. It shows that my mic is good, but you never know. Just give me a 1 in the chat if everything sounds good, looks good. All right, beautiful. Thank you, Tony. Visuals good. Okay, good. All right, perfect. What's up, Never Content? What's up, bro? Welcome. Were you here last week? I think you were. Maybe I'm tripping. But welcome to all of you. Okay, hope you guys are having a good weekend. And we should have a pretty interesting week coming up. Actually, take some of the yellow folders off. So we should have a pretty interesting week. Like I said, we've been waiting for this week. Okay, we're gonna have heavy, impactful releases. That being the federal fund rate in particular. So apparently the forecasters are going to keep it the same. Whether they cut or increase the interest rate, it's going to have an impact. If they increase the interest rate, hike the interest rate, that is making it more expensive to borrow money, right? It makes it a higher yield for the bond, right? The bond yields, which is good for anyone that's invested in the bonds. But the issue is that's negative for the stock market, because if the yields go up, which we'll talk about in a second, that's these assets. By the way, if you guys remember what we talked about, we said that it was going to be bullish. Price kind of right out the gate didn't really give much of a retracement. It already used this and then just accelerated for the yields. We talked about the SMT at the lows, and looks like we were 100% correct, right? It just didn't offer a deep retracement, which, it's totally fine. The direction and what we wanted in terms of narrative worked out flawlessly for both of these. And all three of them worked in their correlation, right? Bullish SMT there. Remember, the yields have a heavy impact on what the dollar is going to do positively in correlation, reverse to the other assets. But the bond market, T-bond futures, 5, 10, and 30 year, they have a reverse impact on the dollar. So if the dollar is going higher, we want the yields to go higher and the bonds to go lower. If we want the indices to go lower, we want the bonds to go lower, right? Which is why there's been a reasonable amount of conviction behind that it was going to go lower. And we'll get into the indices a little bit later. But again, before we do that, let me pull up that thing again. So yeah, we're going to do a full risk on, risk off analysis. We're going to go over, many different things. Take a screenshot of this if you haven't already. You could print it out. You can save it into your, journals. Every Sunday, you should look to identify these things. Okay, get familiar with all this stuff. And then, eventually you'll get to the indices like we will, and you have a very solid understanding of what could or should happen. And you also have a good understanding of what shouldn't happen. Okay? And that's the power of this analysis, okay, and this process. So with that out of the way, like I said, we're waiting for some of the news to take place this week, being the federal fund rate. If they keep it the same, that's going to be interesting. Probably is just going to keep going with what it's showing right now, right? The indices having weakness, dollar continuing to rally. And unless something changes, we'll stick to that opinion. And we'll get into those other assets a little bit later. One of the first things you want to think about when you're looking at the news to start the week is what day has the red folders. And you also want to think of power 3. Sunday, Monday's accumulation manipulation. Tuesday, Wednesday is expansion, and it sets the high of the week if it's bearish on Tuesday or Wednesday, or it sets the low of the week if it's bullish on Tuesday or Wednesday. Okay, so that's the expansion expectation, especially when there's red folder news events there. And then you got Thursday and Friday. So if Thursday or Friday hits a significant PD array after we were expanding throughout the week, that sets a stage for a 20 to 30% retracement back into the weekly range, or the opposite end of the weekly range. It caps the weekly range if a PD array or significant liquidity pool is met after we have had dramatic expansion. If the start of the week was slow and doesn't really do anything, but there's a red folder on Thursday or Friday, a lot of times TGIF is not going to be part of the equation, and the volume is going to come, or expansion is going to come around this moment, and it'll set the stage essentially, build the structure for liquidity to be purged going into Thursday or Friday if that circumstance unfolds. Okay, so by default, you're just thinking bullish or bearish power 3. We'll obviously decide that, what the likelihood is, a little bit later for the asset of our choice. Well, pretty much all the assets, right, that we look at. But we got a busy, latter portion of the week. So Sunday, Monday, there's no news. So I'm really behind the fact that that's going to be accumulation and manipulation. right? So, we'll paint out different scenarios and whatnot a little bit later. So you make sure you want to make sure you stick around for till the end, or at least until we get to the asset that you like. You know what I mean? In the order in which we're going to look at the assets, it's obviously here. So bonds, yields, DXY, currencies, indices, then whatever else we want to look at. If you guys have any recommendations, what you want me to look at, we could do that too. We could look at any asset, crypto, stocks, metals, other commodities. It really doesn't matter. Price is price, and the same stuff happens on every asset. That's why we can be consistent with multiple assets at a time, pretty much every single week. Sometimes things are cracked in correlation, but that's okay. It does whatever it wants. But that's part of the game, right? But we don't trade every asset. I'm specifically an indices trader. You may be a currencies trader. Regardless of what you look at and primarily focus on, we're calling all these assets. Those of you that have been with me for a while, we literally destroyed GBP and Euro. If we would have traded it, it would have been ridiculous because it did exactly what we said it was going to do for months on end. Same thing with the indices, same thing with the dollar, same thing with the bonds and yields. And any other asset that we've really touched, right? They've pretty much done what we said they were going to do, gold included, silver included. But yeah, so you're going to learn how we go ahead and do that, being part of this call today. So with that out of the way, hopefully you guys understand what our game plan is for the news. Again, you want to wait till some of these news events come. Sunday and Monday, you shouldn't be trading on Sunday anyway. But Monday, you should have light risk. There's no news, so it's low probability. You're going to have to wait till 6:30 a.m. Pacific Standard Time to open. And you're going to want to engage very close to a macro, if not inside of a macro. Outside of a macro, unless your setup forms in the macro, if it doesn't form inside the macro or nothing happens relative to the macro, you don't have anything to do. Okay, but if your setup forms in the macro and you miss it, and there's a clear target for you to reach for, then you can look to target something in the mid portion of the hour of whatever macro it is that you're trading in. Okay, but that's some of the rules that we operate with when it comes to no news. And then of course the rest of the week, we'll see what happens. On Wednesday, there's news that comes out. Like I said, that's important. So pay close attention to the effect that that's going to have. A hike in interest rates will continue to support downside in the indices. We may not see things stop. It may continue. And then we'll see higher dollar. Because when you hike interest rates, that means that when you invest in the bonds of the U.S., right, you need dollars to do so. It pulls money back into the U.S. economy, right? It pulls them back to the U.S., to dollars, because the interest rate for the bonds is higher, okay, when it's getting hiked. So they're getting a bigger return on their investment into the bonds. So money floods in, and many times that's a defensive mechanism when they hike rates, although it's worse for the normal population. It's good for investors that want to yield on their money, like billionaires and whatever who like to keep their money in bonds. So yeah, with that being said, we'll keep tabs on Power 3 and these news events. We'll be live again on Tuesday as well, so we'll be here for this. All right, so yeah, with that out the way, let's move on to the yields, or the bonds and yields. Go to the weekly chart. That's where you want to start first and foremost, pretty much all the time. We got these equal highs up here. We got that high there. That's basically equal highs. We've had this as a range, so we have balanced price range in there that's left that level. We do got equal lows here. Before that was created, right? What led up to that was this retracement that created a balanced price range in itself. You guys know that when we have a balanced price range or a retracement that goes higher, when it breaks that high, you have to map out the quadrants. And if it's bullish, it'll remain above the upper 25 to 50%. Preferably, we don't even come back close to the 50%. You can see that that occurred. You also see that the same thing happened here when it created a breaker. It took the lows, hit this little order block, change state of delivery, market maker buy model, sloppy market maker buy model, but buy model nonetheless. And we are also inside of a big market maker buy model in here. Okay, we could see this accumulation here, right? On the left side turned distribution. So origin, accumulation, smart money reversal, low risk buy. You also see accumulation over here as well. So you can see how that was beautifully respected. What happened on the left turned into inversion on the right. And then we got the break in the market structure here. Got the breaker itself, early change in state, retracement, and then price gets above this. So that whole range, when it comes down into that, on top of this as well, it should be balanced price range. This should be an inverted bearish order block or accumulation turned distribution on the right side if we're sincerely going to go higher. There's been lots of talk of rising interest rates. So that's been, in my opinion, a pretty strong catalyst for this when it broke this high to keep going and target this as trendline liquidity. We also got this inversion in here. So that's another thing that is kind of propped this up. Right, you can see the convergence in that level. And again, retracement higher. That's a balanced price range when it breaks this high. Upper 25% should be respected. So same thing's true with this here. If this is going to continue and reach up for the buy side, if it retraces, we have an order block. Preferably, we don't even take that out at all. But we also have this order block too. So it may want to dig into that. But nonetheless, I'm still looking for things to continue to go lower to higher, lower to higher. Balanced price range, upper 25% be respected on the retracement. Balanced price range, upper 25% to be respected on that retracement. Okay, very simplistic way of viewing price. I hope you guys kind of see this, okay? Because it's the same thing's true on other assets too. It's not just because I'm looking at the bonds and yields and applying it to this. This is fractal. This happens on the 1 minute, on the 30-second, on the 15-minute. So the same principle applies when you're looking at those time frames. You just want to make sure you understand where price is going to go potentially on the daily, weekly, monthly chart. That's why we start here. And again, this will have an impact later on in the call with the DXY. So make sure you stick around for that so you don't just get this. Although this is helpful, right? Because you could go ahead and go use this right away. Some of these concepts, right? It's universal to anything. So whatever you learn here can be applied to the higher time frame on the indices, lower time frame on the indices, currencies, whatever the case may be. But yeah, let me know in the chat if so far everything makes sense. So given the yields, I do believe that just from what we're looking at here, order flow is still bullish. We have an order block here, order block here. We have a gap in there. And we also have this inversion for value gap now that's been traded above. So in order for me to change my opinion on this asset, I would need to see a breakdown below this level. Imagine this too. If this was the 5-minute chart and you're looking at the indices, wouldn't it make sense for this same thing that we're thinking about on this weekly chart to unfold? Wouldn't the same thing make sense on the 5-minute? Wouldn't we still expect, even if it was the 5-minute, for this to want to go higher? Wouldn't that just make sense? So why would it be any different if we were on the weekly chart looking at things? Now, on the lower time frame, there's a little bit of a difference when it comes to timing and stuff like that because there's macros. For the higher time frame, you have macros too. It's the news events, right? And certain times of the month, right? The middle 2 weeks in a month are the ones that are most driven to expansion. Because again, Power 3 is happening on the weekly. Power 3 is happening on the monthly, on the quarterly, on the daily chart. So based on what you're looking at in terms of the time frame, you got to be able to calibrate yourself with that realm of Power 3, especially when you're on these upper time frames, because it's extremely helpful context for you to understand what to expect in price. Okay. So just think about that, right? Whatever you observe on the higher time frame, whatever we talk about today on the higher time frame, can be and is used on the lower time frames as well. It does not change just because you change time frames. Okay. It's all fractal. So I'm gonna be of the opinion that this is going to continue to reach for higher prices. Set the target there for just to be conservative. I do think that we'll be able to get up here. One thing that we got to note is that we are inside the bearish order block. Okay, we do have a wick in here too, so you can go into this wick and break it down into quadrants. I probably will at some point this week, because that's going to be important for intraday volatility. It's going to be a reference that you could use on the lower time frame. So we'll see. But this is a counter PD array to the uptrend. So let me know in the chat what happened. What is the expectation and what generally happens when we're bullish and we hit a bearish PD array? Describe what happens or what you can expect in the chat, please. I'm actually running to the bathroom while y'all do that, okay? So give me 1 second. All right, I'm back. Sorry about that. Good morning, Zach. Good morning, bro. So yeah, Let me see what your guys' answers was. Consolidation. Yeah, I wouldn't argue with that. Retracement. So yeah, what is a retracement? What kind of opportunity is set up if you hit a level that starts to retrace? What do you want to start thinking about? What have we talked about when we're, example being bullish, right? When we're running up into a bearish PD array and we're bullish, what type of idea are we looking at? What is a retracement, right? What kind of opportunity would that be? If you're bullish and price retraces bearish from a higher time frame PD array. Okay, anyone else have ideas? I like the ideas there. So what you want to think about when price hits an opposing PD array, you want to start getting yourself from the lens, like get your mind looking at things from the lens of that's where counter trend ideas unfold, right? You could look at it as reversal, but it's not, I wouldn't even classify it as a reversal because not every pullback is a reversal, right? It's literally just a retracement. Reversal means it's going to completely turn, right? Which it doesn't always do when it hits an opposing PD array. It could, there's a possibility for that, but there's other factors that have to also unfold for a reversal. But it's just essentially a counter trend idea. If you're looking at things from the lens of an opportunity, you lower your risk, right? It tells you to lower your risk by half. If you're going to take a short in a bullish move on the weekly chart, you're going to, whenever it goes lower, right, you're going to want to cut your risk. It's a counter trend idea, right? That was the answer I was specifically looking for, right? It's a counter trend opportunity. Of course, none of the things that you guys mentioned was incorrect per se. But the perception of how you see things, if it's a reversal, how do you feel about that? If it's a pullback for entries, what kind of entries, right? Whenever we hit an opposing PD array, you can also think of that as like a speed bump, right? If you're continuously being bullish, right, you can expect a counter trend move to unfold, right? So reach down into a discount of some kind. What discount, right? Some order block, some internal liquidity that we're pushing off of this level to reach into, right? To set up, like Tony said, pull back for more entries, bullish. But eventually you guys are going to be proficient with this lens of seeing things, like this perception of seeing things, so you can end up looking to take opportunities. It opens up a whole new world. I teach how to counter trend trade. I have friends and students that only counter trend trade because they can't get involved with continuously trending environment. They think it's going to pull back every 5 seconds. Well, this idea, this perspective helps you understand there's nothing to fear when it does pull back on you, right? And if it does pull back, right, one thing that I want to also couple with this explanation, right, when price does pull back, right, after we've been accelerating and we hit a counter trend PD array, right, what we're going to want to see happen, right, you'll get a change in state of delivery there, right, so an order block or a breaker of some kind at that level. Price will then reach lower, maybe it hits a order block, or maybe a fair value gap, maybe it hits the upper 25% of the previous range, which, like we talked about and have been talking about, is a balanced price range, or should be viewed as such. So what does that mean in terms of validation? Right? We don't want to see it breach this. But once it hits a level and then starts pushing away, if you can see on like the 15-minute, preferably on the hourly chart, the price gives like a failure swing and then changes state of delivery again, right? Because you have one change in state here to go lower. It's a little shift, reaching down to a discount, counter trend, anchored in the opposing PD array. And then it reaches down into another PD array that supports the idea going higher. The way that you can anticipate that it's time to get back in line and start taking buys again, and not be fearful of price giving a continuation. Of course, unless you're wrong, then it is what it is. But what you want to look for is a change in state of delivery going back to the upside. So you want to see like a, whoops, let me clean that up a little bit. You want to see like a down close candle in this instance, right? Maybe the next candle, right, breaks above it, changing state of delivery there. And there's preferably a wick. Maybe there's a rejection block that forms there, right? Once you see that on a relatively important time frame like the 15-minute or the 1 hour chart, you could then reasonably identify levels like this, okay? And then get in line with it. And if it retraces lower to go higher, what is that as well? What have I always taught you guys? When things go lower to go higher, what is it classified as in terms of a rough framework? If we're correct, assuming we're correct, that it's going to go higher and reach for these levels. When price goes lower to go higher, what happens? Market maker buy model. Exactly, Maddie. So that's immediately the thing that we're thinking of. And when price goes lower, right, we went higher to go lower, that can also show market maker sell model sentiments, right? Unless it breaks the 50% right here, I don't care about the market maker sell model. Okay, I'm expecting, if I'm bullish, to see sell models fail. Unless, there's like a accumulation in here and it does like a baby one to get us down, into this, and it takes some liquidity there on like the 1 minute or the 5 minute, because that can happen, right? But on a bigger scale, right, we have this bigger PD array. So that would be accumulation that should hold to keep going higher. So it's a bullish order block. They should drop down only to accumulate in that area and then give a change in state of delivery back to the upside, kicking us back in line with a buy model. And then we obviously get a change in state, and the counter trend move will be over at that point. But you can position yourself at opposing PD arrays to take counter trend ideas. It's something to practice. It's something to get familiar with. Don't look at every opposing PD array. Like if you're bullish on the higher time frame, don't look at every retracement as a moment where price is going to turn on you completely and oh, now these equal lows are going to be targeted. Like, don't think that, right? If it's bullish and we don't have 3 PD arrays that get violated, or a market maker sell model doesn't unfold where it breaks that midpoint, which will put this in jeopardy, you have nothing to worry about, right? Everything that goes higher, that hits a PD array that's opposed to that higher movement, is not a reversal, okay? You want to wait. Let the higher time frame prove it to you before you shift from your bias. You guys probably have noticed, I know a lot of you that have been with me for a year or more, you guys have noticed when I point out a bias, I'm not changing my bias every single week. My narrative. My bias can change here and there because narrative is what is underlyingly happening overall in the grand scheme of things on that higher time frame. Are we bullish or bearish? The bias can sometimes be bearish in a bullish trend. So your bias on a day-to-day basis might shift because maybe we're bullish for the week, but price is just simply retracing into last week's range or a previous range to then set up a larger run, right? Now, if 3 PD arrays get violated, that's a problem. Like if this would have got taken out, we have a wick midpoint, we have a gap, and then we have this as our 3rd PD array. If price from up here ended up breaking through that, I'm less bullish, right? And I'm going to be seeing how price treats this if it trades back up into it. And once it trades back up into it and breaks, I'm not going to look for buys, right? I'd be hesitant to even consider it if it was to do this anyway. So I'd wait, right? I'd be waiting to see what would happen. And then the 50% of this range too, that would be a break of a balanced price range, a break of a bullish order block, right? It should accumulate. And then we should get a change in state of delivery. And in that case, I mean, this is a good example of what I just talked about, right? What I just painted for you in terms of timing when a retracement is going to stop being a retracement. When price retraces, you want to look for a PD array that it hits, right? You want to look at the previous range also to gauge the 25%. But once it hits a level and starts moving away, you got to map out where's a change in state going to potentially take place. It changed state right there. What happened once it hit that change in state? It retraced into it and then rallied up continuously. Then we retraced again. What happened? It didn't start going higher again until it changed state of delivery again on a reasonably higher time frame. There was earlier signs of this as well in the lower time frames too, right? Obviously. But maybe you weren't comfortable. Maybe it didn't look consistent enough or clear enough for you on the 15 or 1 hour chart. Okay, wait till it gets above something like this on the weekly chart. Then you're really in line with the fact that price is going to continue for probably another week or so. And then you just think of power 3 when this like candle opens up, right? This is a weekly chart. So this candle, you think power 3, right? Once it broke above this high here, you got an order block, right? Price opened up, dropped below the open price. What did it do? Rallied up. What did it reach for? This wick, some of the quadrants, could have framed that as a draw, but you also could have framed the order block up here as a draw. And we talked about, these levels up here being reached for. Okay. So again, let me know in the chat if everything that I've talked about so far has made sense. This is all universal. I don't care if this said Bitcoin, right? It'd be the same exact principle that we'd be going off of. And if you take this stuff and go to these other assets, you'll see just how universal this stuff is. Okay. So I just kind of laid a lot on you guys, from counter trend trading to continuations, timing continuations, reviewed validation, invalidation, 3 PD arrays, balanced price ranges, the role that that plays in validation. Okay. And we also talked about what I assume price is going to do today or this week. I think it's going to probably reach up there. If it doesn't and we get some type of retracement, that's fine, right? Maybe this next week is just a down candle that trades into that wick right there. That's fine, right? I wouldn't be surprised though for this candle, this next one to open up, probably break lower a little bit, and then on Tuesday or Wednesday we'll set the low, and then we'll be off to the races again. Okay, and in this case, when price drops down for this week, again, you want to have your open price. The open price is going to be basically right at the daily order block, close to it. So again, that's a counter PD array. We haven't gotten our retracement from that level yet. Well, I guess we kind of did here 2 weeks ago. This wicked into that low, and then price gave a retracement. Now we've continued to expand. We're in second stage distribution territory if this is going to actually be a market maker buy model that completes. So that's going to be the undertone of what my opinion is on this asset. Okay, it's a market maker buy model. We'll go to the 10-year. Got some similar stuff taking place. We got the midpoint of the order block being tagged there. But again, what can you immediately see in the chart? I kept it very simple with what I just described. We have a retracement, balanced price range. What did it do? Respected the midpoint. Change state of delivery, continuation. Change state of delivery, continuation. Maybe you got faked out here, right? That happens, right? But nonetheless, change state of delivery. We dug deeper. We still respected this previous range. It's not bearish yet. And then we changed state of delivery again. Price wick down into it. We got another change in state. So we got one here and one here. That's a double change in state. That's a very, very strong indication it's going to continue. Right? So now we're above this. So what do we have to do? We have to take the high up here, down to the low. Okay. And that's our previous dealing range. Right? We now have a new dealing range. Being this low, we took stops. This rally up took stops there. So we could reasonably start to anticipate this as well as our dealing range. So very similar, right? This is from this high to that low. That's the BPR that's being left. But now we have this low that took that low. This high that took that high. So buy side and sell side has been engaged, and we've left the range. So now it wouldn't be out of the realm of possibility for them to, again, retrace. but I'd like to see them stay above this upper 25%. If we're going to be exceedingly bullish, that's what is going to tell me that that's the case, that I'm safe, that I can continue to push with that perspective. Okay. So awfully familiar, isn't it? So that's going to be what I'm assuming is going to happen with the yields. Go to the monthly chart for the 30-year. Clean up some of this. There's a quarterly bullish order block there. Just that one right there. You can see that that held up pretty flawlessly. A 3-month time frame, right? I guess it was right there, huh? 3-month order block. What did it do? It got above the open price, came down, respected the midpoint. Why this one and not this one? Because this encapsulates this one. The closure of the body on this order block is deeper than this one. I don't care if the wick is below that one. I'm still using this one. Okay, and it's just part of the rules when it comes to order blocks. You could see 50% respected. 25% of the order block respected. Upper 50 to 25% of that wick right here that it traded into respected. This wick respected the upper 25 to 50%. And it's what? Continuing to go through to the buy side. Okay, on a quarterly basis. So things are still bullish. Okay, from quarterly to daily chart. And again, we mapped this out, talked about this, and it has worked out flawlessly. A little bit more accelerated than I anticipated, but nonetheless, underlying framework, underlying narrative, underlying bias, everything's been correct. So now the next objective, sees equal highs up here. Okay, so let me remove that. And then beyond that, we have the monthly wick quadrants that you see labeled up here. So all of those can be potentially further range targets. Another projection that we can do to get targeting, we have this breaker in here, high, low, higher, high. That was part of the turnaround that set this market maker buy model. Another really nice thing too, when we're looking at this daily chart, see the high up here of the accumulation, or you can take that candle right there to be more precise. The last up candle, the highest last up candle inside this accumulation, that range, right? When you're framing out a market maker buy model, you got to take the accumulation last highest up candle. If it's too tiny, you want to use, a little bit more. If it has like multiple in there that are dojis or small, you want to get a reasonable amount of them. Or if you don't want to keep it this way, you don't care about being this precise, just use the high of the accumulation to the low. 50% of that, once it gets traded outside of it, it shouldn't return into that. You can also use the upper 25% of that high here to that low. That's previous accumulation, previous balanced price range when it went lower, right? Lower 25 to 50%, continue to go lower. Same thing here. That right there was a small market maker buy model we talked about. But when you zoom out, you have a bigger one that's unfolding as well. This is the fractal nature and price. The small pieces that you see on the lower time frame are working inside of a larger whole, a larger story. Okay? And everything is fractal. Every idea that I'm sharing in here, if I find a buy model in this area, I'm using the same stuff. The accumulation on this side should have a similar characteristic to this on the right side. Okay? Retracement to go higher, retracement to go higher. This high to that low, that's a BPR. This high down to that low, since it's a completed buy model, right? At least a little piece of it. That's a balanced price range. We have sell side, buy side delivery, sell side, buy side delivery. What did it do with this gap? It came down to clean it up a little bit. And then it created a rejection block, rallied up, broke this high. So this high to that low is now a balanced price range as well. And price hasn't even really tried to attempt to get down into that, right? We ran up, we hit a bearish order block, right? It's had a little bit of a reluctance to get through it. Now we set equal highs. right? I think that that set the stage for something very nice to punch us up there. We may even get up into that upper level of this wick here. But going back to what I just started to mention, this projection idea, if you want to use a very simplistic projection tool, tactic, strategy, you can utilize something like this. Whenever you see a turning point, if you can identify the smart money reversal on a buy model, just look for the mitigation block or the breaker that is at that smart money reversal phase. Take the low and the high extreme of that overall pattern, project it up, and you can identify 2, 2.5, 4, 4.5, which is a full price swing generally. 2, 2.5 is generally, when it trades into that, it generally sets up a retracement. Okay. This is true on every time frame. If you find a small market maker buy or sell model relative to that time frame, the 2.5% or extension, standard deviation, will present you with a retracement, and many times it goes all the way to 4. Not every time. Don't demand that, but this is, again, a very rough idea, very consistent rough idea on how to project where price is going to go, and then you couple that with PD arrays. So if it's like an order block, or in this case, a wick quadrant, or a low of a wick, right? Or maybe a fair value gap, if I didn't say that, or a breaker, or a previous high. Notice how it's right above that high. It's a beautiful confluence, especially with the narrative that's unfolding here. You could use this if this was identified as a buy model too. Say we went to the 5-minute and we saw that as a buy model, retracement to go higher. That drop down that took the stops right there, wherever the smart money reversal's at, if it has something like this showing, you can project it up. And I'm sure, right, it probably have something showing up here for 2, 2.5, 4, 4.5. Maybe it fulfilled it entirely by getting up to this high, right? So just some stuff to think about. Very, very effective things. I mean, just already, just in the last 40 minutes, I've talked about a tremendous amount of valuable assets you could use in terms of tactics, in terms of understanding, in terms of price navigation, right? So let me know in the chat if you guys have any questions about anything that we've talked about thus far, because I know I've kind of quickly dumped a ridiculous amount of value. Probably went over a lot of people's heads. But let me know if you have any questions before I move forward. I've talked about all these things before, right? But just a reminder that nothing changes, right? It's all the same every week. So if you can give me a 1 in the chat, just so I know everyone's able to follow along properly. If you got questions, just let me know. See, I'll wait for that response. Okay, appreciate you, Tony. Yeah, some of it was definitely in the monthly core content for sure. Not many people apply it properly. Obviously, ICT is my mentor, so that's a given. How do you stop a market maker move? When 50% of the market maker model you're looking at gets invalidated by trading through it and doesn't come back above it. That sets you up with what I call the market maker model flexibility protocol. Like if this buy model, for example, this high to that low, if this buy model got above the 50% here and then we broke down, right, say this happened, say this happened, okay, 50% of the buy model has been traded above, but it broke down below it. Again, it should only spend a very, very small amount of time once we get above 50%. If you're in a valid buy model, if it breaks down through the 50% of that original buy model, and you do something like this, you now have to consider, like say, let's hypothetically say this was the high. You now have to consider this equilibrium for this low to that high as a potential sell model. If it can't stay above the original equilibrium in, like I said, the buy model, and we break aggressively down below it and we refuse to get back above it in a short time, it needs to be a short time that it spends below the equilibrium, the original one, if it's going to be trustworthy. Because if once a market maker model gets above the 50% for a buy model, it should not come back down through it. Otherwise, you're probably wrong. That's what I love about the market maker buy and sell models. It gives you so many opportunities to be flexible. It gives you so much opportunity to identify what you're trying to do in price. And it just makes it clear, right? And if you're right, you're right. And it'll prove it very aggressively with certain things like what I'm describing here. Or if you're wrong, it'll tell you you're wrong. And then what happens if you're waiting until this moment and you got it wrong? And then this kicks in. Well, you're now in second stage distribution territory, and the same principles apply with this equilibrium. If it gets above it, right? If it trades maybe back above it one more time, it ideally doesn't even come back to it, right? Do it just a shallow retracement because we're in that lower 75%. But if it does come back above it, it should be very quick and then start to distribute again, right? And this happens over and over and over again. You could do that with this idea, right? With this little retracement piece in here. If this breaks down, hits 50%, and then aggressively starts to reprice back towards this high, you take that low to that high, get equilibrium up there, and you could navigate a buy model, right? So this can happen in the phases. It can happen in the full market maker model. But that's why this is so impactful. Nobody on the internet uses this topic. Nobody uses it this way at all. Nobody's ever identified this. No one's ever talked about it. ICT himself has never even talked about this element when it comes to market maker models. Using it in a way to be flexible, right? To know when it fails and how to adjust, right? I don't hear anybody talking about it like this. This is unique to this channel, right? But yeah, obviously, you know, concepts came from how do you spot a market maker model? I've talked about that before, but anything that goes higher to go lower should be looked at as a sell model. Anything that goes lower to go higher should be looked at as a buy model, right? Like if you have a retracement like this on the weekly chart or the daily chart, that's, if you're bullish, the sell side of the curve. Every time it goes lower to go higher. Same thing in here, lower to go higher. That's a buy model. Your smart money reversal should be identified at a PD array or liquidity pool. They're not random turning points, right? Smart money reversal only happens at liquidity or a PD array. That's in line with the narrative you're looking to see price unfold in, right? Does that make sense? Okay, so got it. Okay, cool. See, did I miss any questions? Hey, you guys have any questions about any of this stuff? Let me know in the chat. We definitely talked about a lot of stuff. If in the market maker model, market maker buy model reach equilibrium of a market maker sell, can it retrace to 50% of the market maker buy? Yeah, it can. It can. The question is, how does it treat that equilibrium point? Right? Because if it can't get back above it and you're having a buy model, it's more likely that it's going to end up shorting. And then, you know, that breakdown, you have to now measure out that range and watch that equilibrium, right? Because a lot of times people aren't comfortable identifying the whole market maker model from the start to finish. You will be, right? You will be able to do so, but it takes a lot of time. So you got to pick your spot, pick your favorite thing, your favorite phase in the market maker model. Mine's the second stage distribution. ICT said that if he could pick one concept that he's taught publicly for free, he would use the market maker model framework and the second stage distribution, and he would only wait for that. And there's a lot of validity to that, honestly. I do that. I find myself doing that a lot, especially on the lower time frame. Higher time frame, it might take some time, right? It might take a little bit of time for it to unfold. You may not have the patience for it, but when you understand the concept and you study it on the lower time frame, It's happening constantly. Every live call that I do, I highlight a market maker buy or sell model. I talk about the market maker model flexibility protocol. It's being done live in front of you constantly. Those of you in my private group, it's every day. Those of you here on YouTube, it's on the lives once a week. And we talk about the concept here as well. So nothing has to go lower to a discount or has to go higher to a premium. A lot of times that's a misconception. Just because there's a premium PD array doesn't mean it has to go up there. There's other things that you have to consider. What other PD arrays are in that area that would stop it from doing that? Right? On the lower time frame, it may be referring to a lower time frame premium and discount. Right? You may be framing something on the 1 hour, but it's really going to utilize, because that 1 hour is fast, it may be utilizing the 15 or the 5-minute range equilibrium or premium and discount. Right? So things can get a little bit complex over time. You get familiar with how price does this, what type of conditions lead to those things. But yeah, it's a good rule of thumb, obviously, to remember, sell at a premium, buy at a discount. But what happens when it doesn't go to those levels? Do you have a system in place to be able to still engage? If it's a hard rule, then you'll miss moves. There's ways to get around those things when it doesn't fulfill the premium and discount. But maybe we could talk about that another time. Okay, I didn't miss any questions. All right, so with that being said, again, we're going to look at this buy model. I think I've kind of put the nail in the coffin on this. We hit the midpoint here. That was a wick. Right? Obviously, it's had a hard time getting through it. We've set equal highs, so I believe that we will target this upper level up here. Okay, and we'll see how this is treated too, because we did purge some of the lows. Take out some of the lows. We have, okay, we dipped a little bit into that as well. So we got this low to that high. That whole entire range, right? You got to go back to some of the things I just talked about. Got to measure that out, get the lower 25% of the range. Okay. Lower 25%. Erase that. So any retracement should not go beyond that level. But we have another level in here. So we have a bearish breaker right there. So I really don't want to see it get beyond this candle here. So I honestly don't even want to see it get up to this 25% if this is going to keep going lower. And the lower target we have, which we stopped right before it could reach into it, is that fair value gap. Okay. Move that to the right. Okay. So yeah, I don't want to see this go up into that. So we'll keep an eye on this. I'd like to see this just continue to support price going lower. We got buy side taken here, sell side. We talked about this being a breaker. We also highlighted this as a balanced price range. We also talked about this inversion. Everything that we laid out for this asset has worked out flawlessly with literally no mistakes at all. It did exactly what we expected it to do. The yields were the one that was a little bit quicker, but this one literally went to the exact areas that I even had the drawing on. Right, it was just inside the breaker though, up to the midpoint. So yeah, like for example, going back to the premium and discount idea that was just being talked about, if you were to take this high to that low here, right, you would have missed that idea. If it can't even reach up to a premium, it's telling you something. What do you think that's telling you if it proves that it can't even get up to the premium price level and you're looking to go short? What is that telling you? Let me know in the chat any of your guys' thoughts. Right? If it can't even get to equilibrium, what is that telling you about the market? And, let's use this as the example. It's a very important topic, right? First Peter rate respected. Heavy bearishness. Exactly. Heavy bearishness. Same thing's true if it can't even get to a discount. Of course, you don't want to just look at the fact that it's equilibrium not being traded into and, oh, it's just heavy, so it's just not going to retrace up there. What PD arrays are stopping it, right? Maddie kind of mentioned it right there. PD arrays being respected, right? There's PD arrays in the way of that equilibrium. So if it runs up into the PD array and respects it, and you get a change in state of delivery, this kind of dovetails with what I was telling you guys about how to get in line with a move that's continuously running, right? But it's giving you a retracement. How do you time that the move so you know you're not going to get caught up in another leg higher? Wait for a change in state of delivery from a PD array after a liquidity pool is taken, right? Or one or the other, right? Stop run and a PD array, maybe just a stop run, which in itself is a PD array. Highs and lows are PD arrays. Or if there's like a gap or something, if it trades into it, or an order block, if it trades into that, leaves a bearish order block here, and then breaks through it on this candle and the next couple candles until your target is met, you can now rest assured that you're in line with the downside move and the retracement's done. It's because it changed state of delivery. And of course, because the higher time frame is where the narrative is at, if you want to get in line with the actual higher time frame move, you want to use things like the 1 hour, the daily, the 4 hour changes in state of delivery, because that'll give you a much stronger reaction than a 5 minute or a 1 minute. The 5 minute and 1 minute have to be in line with something like this to get the best result. Okay, so things have to agree with one another. You have to have that context aligned. And then, of course, hopefully it's at the right time as well, both for the day and then also the week, right? The right time of the month. Like I said, the middle 2 weeks in a month is where the expansion happens on the monthly power 3. So yeah, hopefully all that stuff makes sense, you guys. Appreciate the questions. We talked about a lot within the last hour, right? So even if you turned it off right now, you have gotten value. But obviously we're not done, right? We have a lot more to do. So again, hopefully all that made sense. But that's essentially my perspective on this. I wouldn't be bullish on this asset unless we break this high, because we have the range in here. That's a BPR. We have these gaps in here. We have a suspension block right there. So that's one PD array. We have the midpoint of this, and then we also have this high. So that is the 3 PD array rule showcasing itself. Okay, very simplistic. I'm bearish until this high gets taken out. So any retracement up, I'm looking at that as counter trend, right? We just hit this liquidity. That's an opposing PD array. It's also external range liquidity in the short. So what happens generally after a large external range liquidity pool is taken, or any external liquidity pool is taken? Many times there's an interest for it to want to retrace. Retrace into what? Some PD array that's above internal range liquidity, or inside internal range liquidity, which is right there. Okay, very simplistic way of thinking about things, or at least I hope it looks that way. Where's my suspension block? There it is. Okay. So I wouldn't be surprised. These are daily candles. I would not be surprised if the next candle opens up, rallies up, takes out these relative equal highs here. Because if you notice, they're relatively equal. But I'd really like to see that it stays below the midpoint of this suspension block. And if we do run up a little bit further, that's great. I have up to the midpoint. If we take that midpoint, we have to consider that price may look to want to come up here now, right? Because it'll be kind of refusing to be as sensitive as we would prefer it to be if it was going to go lower. And if we see that happen with this going up through those levels and this thing breaks down and looks like it wants to break this, things may change, right? We may have to adjust what's happening. But for now, this is what we see in price. Okay, so this should go lower. We should continue to see this thing can go, this could go higher and this should go lower. Okay, so I'm looking for something very similar, right? I prefer that we don't break above this. When it comes to this, this one, which I think is a 10-year, it's retracing into this. This is a bearish breaker. Only way that I'd turn this off is, again, we have gaps in here. I'll classify that as one gap. We have a breaker, volume imbalance, swing high. So if we break this volume imbalance, that's already 3 PD arrays being taken out. We already got the breaker block. We have the fair value gap and the volume imbalance. In this case, it doesn't have to break this high. And if we break those levels, come down, support this, and give a change in state, that makes this a target that we could trade towards. Right? But again, unless that happens, you know, it's not out of the realm of possibility for this to be a retracement. And then look for it to continue to go lower. So Sunday may open up, rally up, or consolidate. Monday may give a displacement higher, come up and take some of this, offer a counter trend trade. Hit that, maybe it hangs around going into Tuesday. If it doesn't start to release lower on Tuesday, maybe Wednesday peaks up above Tuesday's high, uses it as counterparty liquidity, leaving this intact, and then the delivery away from that because there's a news event that comes out. Maybe that's what happens on Wednesday, and we start to aim at this low, and then the fair value gap levels down there. Maybe even get us below this bigger level. Right, that's way down there. Oh my gosh, that just happened. Okay. So yeah, that'll be a more long-range target for like the next 2 weeks. If this stuff stays intact, okay? So yeah, that's my thoughts on that. Yeah, that's my thoughts on the bonds and yields. So now moving on to the DXY. Let's go to the monthly chart. Notice how we did the very same things. We have all the same characteristics. This high, low, higher high, that is looked at as a BPR. We left that range. What happened? It came down into it. The upper 25% is being respected from this low to that high, or from this high to that low, given the big range, it's in that upper 25%. Okay. Price is staying in that, and we're continuing to go up. Go to the weekly chart. What did I tell you guys a second ago? How do you determine that a trend is now back in line and you're done with the retracement? You get a change in state of delivery on a large time frame. We already got the early change in state. I had this note watching this literally last week. Okay. If you were here and you remember, you were taking notes and paying attention. I talked about accumulation, manipulation, distribution as well. Were we not correct exactly with what it was going to do on this as well in advance? Were the levels that we talked about respected? Right? Did they ever get disrespected? No. Right? From this low to that high. This is an instance where it did go back to equilibrium. From this low to that high, it came down to equilibrium. Right? It's something that you definitely want to monitor. But if it refuses to go down into that level or go up into a premium, you don't want to only solidify a move or think you have a move just because it goes to a premium or a discount, or think you don't have a move because it doesn't. Right? Because you do. Right? The markets are very versatile. It takes time to obviously be versatile and flexible. You have to understand the components and, practice and do things like we do every week on these live calls. But, eventually you'll get there. But again, we have the change in state of delivery. So things are still valid. We did hit this rejection block up here. Price had somewhat of a hard time trying to really fly through it. But now we're returning down into it. So now this is an inverted rejection block. So that rejection block level should be sensitive. We have a market maker buy model. We have a bullish breaker here we talked about. We have an inversion fair value gap in here. We have a new dealing range. Low taken, change in state of delivery, buy taken, or highs taken. So now we got low to high. That's our new dealing range. But if it never comes back to that equilibrium because of this breaker here, which is very much could be the case, we could use the most recent swing low to the most recent swing high inside that range, because we have a roadblock for this to get down to a discount, right? That being the PD array there. Okay. So you could use this low to that high, measure that out, and you get equilibrium, and you could use that for continuation. What's up? Mick? I'm just call you Mick, bro. Mick. Do you do live stream? Yeah, I live stream every Tuesday for New York session. And I live stream every day with my private group, but twice a week here on YouTube. One being this, which is a prep call to get everyone familiar with what we're going to do for the week. And then Tuesday, we engage based on the stuff we do on these calls. So you don't want to miss these calls if you're going to join on Tuesday, because you don't know what we're talking about. And I don't go in depth the way that I do here, because I expect you guys to watch what we do on these calls and then come to the Tuesday calls, because it just gets you aligned. Obviously, I don't, not give you information about what I'm thinking price is going to do, but you want to double whammy it, right? You want to have both resources. Otherwise, it's you may not get as much value. You'll still get a lot of value. But I do encourage you guys to watch these videos with the live calls that we live trade on or call setups on. So yeah, hopefully that answered your question. I've traded New York, I've traded London, I've traded Asia. But yeah. So you have to go check the details in the description, or you could look on the top of the screen. You see join the family. You could scan that QR code and it'll give you all the details to that. And again, it's not for everybody, right? But if you think it's for you, if you like my teaching style, if you want to be part of this type of thing and what I do on Tuesdays pretty much every single day, because you think it'll be beneficial to you, you could pull the trigger on that, or we could just have a conversation about it. I can answer any questions as well privately. But yeah, so again, where we're at currently with the dollar relative to all the other things that we've discussed, everything that we've talked about for the last 3 weeks has basically unfolded. We pretty much talked about this whole run. I shouldn't even say the last 3 weeks. We've been talking about and walking all these assets that we discuss every single week like a dog every single week, proven by the live calls that are recorded. It's just done what we've said it was going to do every single week, right? Which is pretty phenomenal, right? And I hope you guys have been getting value from the experience this week, or this year. Those of you that may be new, I know those of you that started with me last year, like Tony and a handful of others, you guys have given me good feedback on it. And what you guys have been doing recently has been very impressive. So kudos to you for that. I'm happy to play, a small role that I play to help you guys gain clarity. Yeah, I look forward to seeing how far you guys take it. But good morning, Empire, by the way. Sorry I didn't see what you said. said a month ago we were going down. Yeah, well, no, they're stupid. They're literally retarded. People that know, people that are in the know, they know. You know, people try to fight it. They could keep trying to fight it, but hey, we need people to fight what we talk about in the ICT community. Okay, we need them to doubt it because we need counterparty liquidity. Simple as that. We need trendline traders. Okay, not that they can't make money doing that. They're not going to be as precise as us, but we need them, right? We need stochastic traders. We need the MACD people. We need these volume profile and whatever the hell else, order flow indicator type of people. We need these people. We need them. You know, there has to be a winner and a loser, right? For whatever reason, you know, it seems that we end up on the right side more than we don't. So again, they play a significant role. It is what it is, right? So, you know, encourage them to, if they refuse to learn ICT stuff, encourage them to trade these other things because it's good for us, right? It's good for people that know what's going on. Shit, it's even good for the people that trade those types of those concepts that are actually really good with them. It's even good for them, for people to keep using them, because many times, even if they don't notice it, you know, their counterparty liquidity is being triggered in as well. You know, unless there are counterparty liquidity, then all of them are going to be slaughtered. But you know, it's kind of the way the cookie crumbles. This is war, you know, and I think our armies in the ICT camp, our weaponry, it's unmatched. And I mean, you could just look at the live calls that I do. I'm nobody, right? I'm just some dude on the internet who's traded for almost a decade, who's a purist with ICT, who's found success with it. But hey, who the hell am I, right? But if you look at the live calls, you know, it's a real edification to the content, right? How good this stuff is. And I just try to make it simple for you guys to learn. I tell you what I do. If you like the teaching style, hopefully you're being, you know, you're going to be able to manifest your blessings from it, you know. But again, I appreciate you guys letting me play a small role in what it is that you guys are trying to do. And I hope you guys have been getting value. Tony said, we are the best. I love that. I love that confidence. Yeah. Hey, Empire. Hey, encourage them, bro. Don't be mean, bro. Encourage them, bro. And then maybe with your success, they'll wake up. You know, snap your fingers and they'll be like, oh, how'd you make 5,000 in a month? How'd you make 10,000? How'd you quit your job? How'd you make it so you could cut your hours at your job at least? I want to learn how to do that, right? Let your success convince them. You know, we don't have no time to argue and do all this nonsense. You know, if people are really looking for the right answers, they'll get them if they look hard enough and have an open mind. Especially when they're in a community like this or any other one that's on the internet that proves that they know what's going on. That's not just giving you screenshots, but can actually come out and teach it, you know, and show you detailed live, right? It's very convincing. It's hard to look away when you see this stuff doing everything that we say it's going to do every week. You know, it's not only me either. It's you guys too. Let me see. They don't trade like us and they get faked out. Yeah, I know. Tony, I think you're one of the people that tells me all the time. Fritz too. He's not here today. But a lot of my students come to me and say, hey, this person's live or that person's live. And you did this and they got beat up. They funded your trade. I'm like, dude, it's nuts. I'm not going to say any names because, you know, I'm not going to throw shade at people. But there's many of these very popular ICT traders also that live stream while I'm live streaming. I have students in my private group and you guys here on YouTube. Tony, I think you're one of them that always tells me that they'll be doing one thing and we'll be looking the other way and we'll be correct more often than they are, but they have a huge following. It's nuts. It's nuts. But hey, you know, I like that we're kind of small. You know, I'd love to be bigger because I know I could help more people. That's the only reason I'm on these live calls anyway. But yes, speaking of that, if you guys get value from the content, if you support what I do, definitely don't forget to like the video, subscribe to the channel. It tells YouTube that what we do here, you know, we're doing a good job, right? And more people should see it. And I would definitely like to help more people. Let me see, bro. They make fun of me. Yeah, no, just ignore them, bro. I would ignore the crap out of them. It's gonna be hard to ignore when you're living your best life. Like talking about, man, and they'll be saying, man, the markets are shit. You'd be like, yeah, really? Well, I don't think so. Like I've been hearing a lot of people say the markets are shit. It's so difficult. Blah blah. All this stuff about the markets these days. We have had literally no problem figuring out where price is going to go. The consolidation was a little bit annoying on the NASDAQ, but even in the consolidation, you guys know, those of you that have been with me, those of you that are in the private group, you guys know the vibe. Am I bullshitting? Every week we have continuously still, even in a condition where everyone's saying is horrible, we've still been able to identify what price is going to do. Find a setup or 2 or 3 or 5 every single day. Those in my private group know that for a fact. You guys are live with me every day. I know some of you are on right now. But yeah, it's wild. I'm still blown away for the most part. It's a while. Click join. I'm not. Is it that? Yeah. Yeah, it's on WAP. Yep. So yeah, you could read through some of those details, see if they interest you. If not, you could just stick to here on YouTube for a little while until you make a decision. There's no rush. I don't encourage any of you to just join my private group just because you see one live call where it works out. Put me to the test like you should, like I used to the people that I would follow. I don't follow anyone to learn anymore other than, ICT and my other 2 mentors who I had to pay thousands of dollars to be a part of what they got going on. But, it was worth every penny, because now look what we do every week. Not everyone's worth the investment, but many are. But I make sure that those that can't, go that route, because, times are hard. People have hard circumstances right now across the world, here in the US. So that's why I do these things. I used to not even do any YouTube. I was just private. I had a free group. Then I closed that because there was too many spammers. And I just worked privately with people. But then I was like, you know what? I can't let these spammer pieces of shit win. I want to give value. I want to help people. And then I started going live 2 years ago, every single week. And it's been fun. I've met a lot of you. We've become good friends. It's a tight-knit community, and I really appreciate that. Trading's lonely. You know what I mean? Like, you want to get a tribe of people that have your best interest, that you can confide in, that you can share ideas with, people that are going to be honest with you, and just be there with you. You know what I mean? What's the point of being successful if you have nobody around you that you can help or pass the blessing on to? At least that's the way I look at it. So yeah. Hey, the link to your Discord, can you shoot it? Yeah, it's in the description of the video. You could just go pop down there. There's the free one and then the private one. And if you guys do click on the free one, please let me know if it works. If it gives you any problems, just let me know. Hey, if you spam, it's not going to be a good thing. Just for future reference, anybody, there will be no spamming. Let's see. So your private group, how many hours? I go literally live every single day, 3 hours a day. Literally 7 days a week. Holidays, I was live on my birthday, live when I'm sick. It's every single day. Every day. I'm doing something about trading every day. This is what I do. This is my life. So yeah, it's every day. Let's see. It's not working. You talking about the free one? Goes to WAP, and WAP just sits on the WAP page. Yeah, no, the free one's not through WAP. The free one is just in the description. It just says the Discord link. Oh, the paid one? Paid one should work. Which session? New York. I'm in America, so I trade New York. Yeah, if not, I could send it to you privately, or you could scan the QR code on the top. It'll take you right to the right page. If the direct link, I don't know why the direct link wouldn't work. I'm gonna have to check that. If any of you guys can go check that as well outside of Empire. Oh, maybe I'll do it later. We're doing something, right? But yeah. 3 hours per day. What session? Answered that. Okay. Yeah, you're scaring me a little bit, brother. I was getting worried. I was like, wait, not again. Oh, what's up, Emmanuel? Private group from like, yeah, Emmanuel's in the private group. Yeah, good morning, Emmanuel. Good morning, good morning, good morning, bro. Do you start 5:30 a.m. Pacific Standard Time every day? Yeah, when I say every day, I mean every day. This is what I do for a living. So I need to be up every day. So yeah, 5:30 a.m. Pacific Standard Time, pretty much every day in my private group. I had to close YouTube. Oh, yeah, YouTube. Freaking YouTube. Tech problems, yo. That's me and Zoom. Me and Zoom have a love-hate relationship. Ugh, freaking Zoom. I wish there was a way that I could use something else. Nothing else is as effective. Now they got AI too, so now it's like it's able to give like overviews of things that we talk about. Like it sends me a thing now, like a summary of all the conversations I have with everyone and what I talk about, what I emphasize, what I focus on and teach. It does a pretty good job, actually. I saw it the other day and shared it in the group. But yeah, so I'm gonna keep observing that because it seemed pretty dope, honestly. But yeah, so with that being said, let's actually hop back onto this real quick. Again, we got rejection block, we got change in state of delivery. I think that dollar is going to keep getting up to our target we've had for the last 2 weeks, being the monthly fair value gap. I think that we'll be able to get up into that beautiful market maker buy model that we talked about. Talked about this being a breaker, right? That's not only a breaker, it's also the accumulation on the sell side of the curve. Price rallies up above it, creates accumulation to distribution, balanced price range in here. Those of you in the private group that have learned the razor model, you know the razor model is right there, right after the stop run. We had this change in state of delivery coupled with this change in state of delivery. Look at the layering effect here. See this change in state? Look at the layering. We had that change in state. That one is on the daily chart. And then the next change in state for the higher time frame was right here. Okay, so this is the weekly. This was the daily change in state. And this right here was the 4-hour change in state of delivery. And if you keep going lower, it gets smaller and smaller and smaller, closer and closer and closer. Right? Sorry, I was behind listening to it all. Yeah, no worries. No worries. You can always watch it later too, brothers. Never a rush. Appreciate you hopping on as always. Okay, let's see. Just join $49. Okay. Okay. The next step is just going to be to. Well, I'm gonna send out the link tomorrow. So first step is focus here, right? Make sure you try to gain as much information from this as possible. You can always ask me questions if you have any particular questions. You could always hit me up. But from that point on, right, you could just kind of scroll through some of the pinned messages in the community tab. I have a start here section in the community in the private community. If you click on the community tab, all the pinned messages on every tab will have important information. So the community tab specifically, if you go click on that, it'll have a lot of different things there for you to look at. Again, first and foremost, you should probably send me a breakdown of who you are, where you're from, how long you've been trading, what your difficulties are, what your strengths are. That'd probably, in my opinion, be the best step, right? Um, and then, of course, spend a little bit of time digging through some of the stuff and read that pinned message, right? There's one that tells all new students what you need to focus on, where we spend the most time. There's a lot of stuff in the Discord. It could be very overwhelming. You don't have to be overwhelmed, right? Because I'll keep you on the rails. That's kind of what the whole point is too for being part of the community. The private community will be on Discord. Yeah, 100% it's on Discord. 100%. Rich in a free Discord. Okay, perfect, brother. Perfect. Yeah, I appreciate your guys' interest. Again, I'm here to answer questions. I'm here to help you in any way I can. Yeah. Mick, I'm gonna just call you Mick, or Mike. I'm gonna call you Mike. Actually, let's just stick to that. So yeah, just send me that if you could, and we can go from there. You could ask me any questions about how everything is, and once you tell me about like kind of what your experience is, I'll be able to help you even further. Of course, if you haven't watched the 2022 model, I encourage you to watch that whole series. That's a prerequisite. Just for anyone that tries to join, you need to make sure that you watch through that 2022 stuff. Because it'll be very helpful baseline. And then of course I have my videos and things I'll push you to, but I don't care what experience you have. If you haven't watched that 2022 stuff, or you're pushing it off for God knows what reason, go through those videos. In every video, you have me to now help you with any questions, so you're not stuck. Or I can tell you, well, that's important, but you can come to it later, and just keep moving forward, and it's not going to hurt you. Can this live trade can be accessed from Discord? No, I don't go live on Discord as well. I keep this for the YouTube channel, and the students that are in the private group, like Emmanuel, right? They hop on because this is my overview. I just felt that I might as well give this out. I want to help people, right? I could keep it private. I could make these Sunday calls private, and just keep it to them. But I just figured, like, why not give as much value as I can to you guys here on YouTube, right? Because they get a ton of value. They get live calls every day in the private group, and we're constantly going back and forth. And yeah, they get a lot, right? And the students that work with me one-on-one, they get even more. So it's like the YouTube channel and everything. There's value in everything. Just depends on what you need, right? Your needs, right? But yeah, so again, when it comes to the dollar, I think we're going to get up here. Just keep it simple. Unless we break down below this midpoint from this high to that low, or close below the breaker here and this inversion fair value gap. Think about it. We have an inversion here, breaker, and a swing low. So if we break that, that's 3 PD arrays. So hopefully you guys are seeing the examples I'm sharing in terms of identifying the 3 PD arrays when it comes to validation and validation. We've talked about this a lot. ICT's talked about it, but this is how you apply it, right? It's very important to be able to apply these concepts. Theory is one thing. It sounds great. 3 PD arrays, super easy, right? It may be easy, but how do you apply it, right? There's a whole experience phase of things that that needs to be engaged. I do not see chat on the list of menu. I'm not sure what you mean by that, brother. I'm not sure what you mean by that. But yeah, so this is my opinion with the dollar. If you guys have any questions about the dollar, let me know. Otherwise, we will move on to the currencies. I just put a 1 in the chat if the dollar makes sense, what we're looking for. So I'm gonna just keep pushing this higher. Okay, just, let me know 1 in the chat, or if you have any questions, let me know, and then we'll move on once I see. Don't want to leave anyone behind. Again, don't forget to like the video if you haven't already. Subscribe to the channel if you guys get value. Okay, appreciate you, Tony, as always. Okay, so now we move on. Maddie, thank you as well. Move on to the currencies now. So if we move this to the weekly chart, let's go to the monthly real quick. So yeah, look at what's happening with this asset. It's so gross, right? It's just we're stuck in the same type of consolidation the NASDAQ was stuck in for like a couple weeks. This has been since last year in June. It's been stuck in this back and forth, seek and destroy type of range. It's because there's a lot of stuff happening with their economy, right? With the UK, Europe. Seems like the EU is starting to run away, right? The euro. So we'll see what that wants to do. It didn't hold above this wick, so that makes me think that now this wick could be looked at. We do have these equal lows that I have outlined. So I'm still going to have the opinion that I had last week. Nothing's been proven otherwise. All right, I think that we'll continue to keep going lower. Also got this monthly fair value gap in here. Okay. So as long as we stay below this, I think that would be nice. Got that lower level right there. We talked about this inefficiency here from the quarterly perspective. We still have a little ways to go to fill that in as well. So we've got this low here. We can actually now adjust this because now we have this little gap in here that needs to be targeted to complete and make this efficient, right? Because we only have buy side delivery here. And now we're coming back down into it. So that only has buy side. There's a wick here, but it doesn't cross over that piece of price delivery. That's not a balanced piece of price delivery. It's inefficient to the sell side. So how do they balance this out? If it's sell side inefficient, they have to offer sell side, right? We had this large wick, prices broke down through it. So that should be a balanced piece of price delivery, at least for the time being, until we fill this in. I wouldn't need it to come down into this because we already have buy side offered here, buy side offered here. So it doesn't have to come down into those levels. If it does, then we're probably going to be longer term bearish. And we may look to fill in the rest of this. If it can't hit this and close that in and then start to, maybe create a rejection block or start to rally up, right? Assuming the dollar ends up dropping as well when it fulfills this. If it can't do that, then of course, if dollar keeps going higher, if we hike interest rates, all these different types of things, we'll see this continue to look to go lower. When it comes to the GBP, you see this wick in here, it's respected the midpoint, traded up into this one, respected the midpoint on a closure basis. It looks like this is prepping to try to drop a little bit further. But we'll see. If this changes state of delivery right here, then again, all of this will have just been a retracement to go higher. If it does that, then I'm assuming that this will also fill this in and then continue to go higher, like I mentioned, could be the case. If we see the dollar start to turn around, maybe the dollar hits that monthly fair value gap, starts to tank, and then that's when we start to see this thing turn around on a quarterly basis. It's going to take a little while for us to get down into that level, right? That level's from a 3-month perspective. So it's a macro view, right? But nonetheless, that looks like where the waves are headed. And it's even more likely because we got these equal lows here. That's super, super clear equal lows. And we'll see how price wants to treat that. So if we move down a little bit further, right, we talked about this bearish order block. I talked about price trading up into it and then rejecting it. Price traded up into it, respected the lower 25%, couldn't even get to the lower 25%, treating this as a BPR. Talked about this as a market maker sell model. What happens when a market maker sell model is completed? If it's going to keep being bearish and we're going to present more market maker sell models, the lower 25% of that market maker model that got completed should remain intact. It should not trade beyond that. If it does, it may look to set up a buy model, right? It may come back into the range deeper. right? But if it respects this like this, we are exceedingly bearish. So it's just another reason to anticipate it's pretty bearish. And this retracement happened, and now what do we got? We got a change in state. So now that is continuation worthy. So I wouldn't be surprised if we look to target the rest of this and aim for that 3-month perspective. But also these relative equal lows here, I really like these. Okay, I like these lows, right? This candle's low here, but that candle's low. If we drop down to a lower time frame, that is a low and another low. That's equal lows. With the dollar going higher, we have a draw on liquidity being the monthly fair value gap if this stays intact, right? If that stays intact, this will reasonably be able to reach for those lower prices. So that is my perspective. And the only way that I would turn off my interest to go short on this asset is if we get the order block, the high, and the 50% of this order block closed above. If all of that happens, I then look for these equal highs up here. All right. Before it reaches that, though, if we close above that midpoint, we got the inefficiency here that I talked about. It's a liquidity void. It's inefficient to the buy side. It's got sell side here, but this doesn't have even a wick of buy side in that area. It's a gap, right? It's a liquidity void. It's one of ICT's PD arrays. Why is it called that? Because it's void of liquidity. There's no liquidity in there. So it offered sell side, but it's inefficient to the buy side. But they're in a hurry, right? Now we also, aside from that order block change in state of delivery, we just identified on the weekly chart being here. If you go to the daily chart, we also have a bearish breaker. So what do you think I'm going to be looking at here? I'm going to go ahead and outline the bodies of this candle. Okay. And that is my bearish breaker. Okay. So we'll see if price can't look to drop lower from there. It's already traded into it. So maybe it opens another candle for the week. It delivers a little bit more into it, but it's already started a displacement lower. It's already started its gravitational move to these equal lows. So I still believe that we should be able to get down there. This can also be classified as a market maker sell model. This low here of this breaker, go to the 1-hour chart, could see that a market maker sell model unfolded there as well. We had accumulation, manipulation into the weekly bearish order block, which is also the smart money reversal of this sell model. Okay. And now price is broken down. So we have accumulation, manipulation, distribution. We had rebalance offered. So now we're in redelivery. So we should get a pretty speedy decline down into this level if we're really going to look to go lower. And again, that also has a breaker here that we talked about. So again, unless our invalidation levels are hit on that higher time frame. Okay. Daily. We're going to keep going lower. Okay. So yeah, we would have to see this high get taken out from this perspective if we're going to look for this thing to start going higher. I mean, look at this. We identified the SMT here as well. I talked about how with dollar going higher, this is very suspect. I said this is probably fake. And if we break this low, we're going to continue going lower again. But if it retraces and, changes state of delivery again and dollar falls, then we'll look to target these equal highs up here. I don't believe it's going to reach up into those equal highs anymore. Right? I don't even think it has a chance. It was skeptical already with the SMT. And then now we have a bearish breaker here. We got an inversion. I mean, it's just beautiful setup for us to now have a market maker sell model targeting a low here. We had accumulation in here, then a rally, and then price broke down. That, if we go to the 1-hour chart, has a market maker sell model in it. Smart money reversal is seen above equal highs inside of a bearish order block. okay? And then we got change in state of delivery there. True full change in state, shift in delivery happening down here. It's a breaker. So as long as this breaker, high to low, if that range stays intact, we'll still continue to go lower. So this is a bearish breaker for this asset. Okay. And then we got the breaker here for this one as well. With the target being this inefficiency on that higher time frame, and these equal lows on this lower time frame. That's in conjunction with that quarterly target or objective that we have outlined, okay? So yeah. And this is really nice. Wick into the breaker, closure outside of the breaker to the low, right? Lower. So there's nothing in here telling us otherwise that outside of price going lower, nothing's telling us that it's not going to do that. We need to wait, right? If we're going to try to see bullishness, we can't just pick a low. Same thing if we're trying to go bearish, we can't just pick a high. We got to let things unfold, right? Let stops get taken. Let changes in state of delivery unfold and look for very obvious targets. This was trendline liquidity as well. What kind of liquidity is trendline liquidity? Is it high resistance or low resistance? Let me know in the chat based on what I've taught you guys. High resistance or low resistance? Oh, man. Let me know in the chat. I think I'm still getting sick, dude. Ugh. Okay, low resistance. Yeah, low resistance. Exactly, Maddie. Exactly. Empire. What's the up arrow? What do you mean by the up arrow, bro? Let me know. What do you mean? Up. You talking about bullishness? Oh, high. Oh, okay. That makes sense. So yeah, high resist. It's not high resistance, right? Trendline liquidity is low resistance. So yeah, so failure swings, low resistance. Stop runs, the price trades back into, high resistance. Trendline liquidity, retail liquidity, aka low resistance because the whole retail crowd's on that side waiting for price to go down into it and bounce. Because that's their expectation, it's low resistance. You see how it delivered through it? Yeah, the whole purpose, the whole idea with them being retail, anything retail ideas, like typical retail ideas, whether people like to hear it or not, we weaponize that logic against them. Literally. They see price running into a level multiple times as a strong level. We see that as building liquidity to be targeted. Just that example alone, diametrically opposed, right? They see trendline liquidity. It's bouncing off of it. So it's strong. It's going to keep going higher highs, higher lows, higher high, higher lows. We see built up liquidity here. People's stop losses below each of these lows. Especially if you're bearish and you see it building up trendline liquidity with a retracement. That's all this is, right? Inducing them to go higher, inducing, offering premium price levels to smart money. And then it breaks down aggressively and takes them out. And then it creates a breaker. And then it just, also creates market maker sell model. So you can kind of see how everything's diametrically opposed to what it is that they see. And it's fascinating. It really is. But if someone's been, trading normal retail concepts using MACD, stochastic, EMAs, whatever the case may be, if they've been doing that for a long time, they get married to it. And it's like a religion, right? They can't shake it, right? They're in the cult of losing, right? We're in the cult of winning. If you can even call it a cult. We just win, right? But yeah. So anything retail logic based, right? You got to question it. We are retail traders, right? Can't get away from that. We are retail traders. We think much differently though. And it's not typical. It's revolutionary stuff, right? It really is. And mind you, if ICT did not come up with this stuff, if he wasn't the founder, there would be crystal clear evidence by now. He has 2 million followers, subscribers, and then another 800,000 on Twitter, on X. And I mean, there's people all over TikTok and Instagram and everywhere, right, that are understanding of him, that know who he is. By now, some big players would have came out and said, dude, you're full of BS, bro. Here's the facts. But not one person has ever been able to come out and say that. They claim it's like certain stuff, but that's just an opinion. And it looks like Wyckoff. People say his stuff's rebranded Wyckoff. Bro, Wyckoff is not as accurate as this. Okay? Go get Wyckoff's explanation and ICT. Completely different. There's no similarity. I mean, there's maybe some similar stuff, but it's not at all exactly the same. There's many things that just don't click. And you study the concepts long enough, both like Wyckoff and ICT, if you do your due diligence, you start to see, wow, there is completely nothing the same about this. The diagrams like market maker models and Wyckoff look similar, but they are not as precise. It's not as easy to follow, right? Yeah, I bought that book too. I burned that thing like 5 years ago. Literally burned it because I was so upset. Yeah, I was painfully destroyed by many normal retail stuff because it's just stupid. And mind you, if we really sit back and take a minute and reflect on some of the retail stuff, the lagging indicators, the overcomplicated explanations, when you really go ahead and look at it, like animal patterns, bat patterns, like if you really think about it, none of this shit makes any sense. Like, how does this influence where the market's going to go? It doesn't. The market's influenced by inefficiency and liquidity and news events that come out, right? And even that doesn't even control things. Everything's already programmed to do whatever it's going to do. Which indicator do you use for FEG? I don't use an indicator for FEGs in general at all, because a lot of times those things are wrong. You don't use an indicator for FEG. Yeah, you can. Exactly. It's best to highlight it yourself because there's nuances, right? There's a lot of nuances when it comes to fair value gaps. Not every fair value gap is worthy of being marked off, right? There's rules behind them. Of course, if you're learning pattern recognition, it's good to go identify as many as you possibly can. But, if you're just brand new, it's best to not rely on indicators like that because you're going to train yourself to see them incorrectly, right? So, and you don't want to do that because then you got to go relearn and unlearn and, do all these things. Yeah, changes in state of delivery are very subjective too. You don't want to have an indicator for that either. I mean, it's easy enough to identify the change in state of delivery after a while, right? You just got to be, patient, study, and kind of watch what transpires into a change in state. The last down candle before a move up, right? You want to look at that. And if it's at a PD array with context showing it's going to go higher, that's the key indication behind any PD array. What is the context that supports that idea turning around or functioning the way that it's taught? It's not a pattern just because it's a pattern, it's going to do this. Like a breaker is not a breaker that's valid just because I see a low, high, lower low that breaks through the low. This breaker is effective and likely going to be used to target this draw on liquidity because it's anchored in a higher time frame narrative, retracement to continuation. So it's in a position where that breaker is forming at a level it should be effective from because it's continuation. We have a clear target. We have context that makes it viable. That's the key component, right? Unless you're trying to figure out pattern recognition just to get familiar with the patterns, that has its place, right? But to be effective and consistent with this stuff, you have to understand the context, which, we talk about the context all the time behind all the different ideas here on this channel and in my private group. But without the context, PD arrays don't matter. PD arrays are useless without context, okay? No context, no PD array, okay? Because you'll find order blocks and fair value gaps and all the PD arrays everywhere all throughout the chart, right? But that doesn't mean that all of them are valid. Maddie, like I said, the context behind the fair value gap, the context behind the inversion fair value gap, the order block, the context is what makes it significant. That's how you choose them. And what time are they showing up? ICT has mentioned for fair value gaps to identify the ones that work. You could even use higher time frame quadrants of the wicks on the daily chart. If you're trading inside of a daily wick that's over here, and you break it down into quadrants, into quarters, and you move it over, and you have the context showing that it's going to go through that level. If you can find a fair value gap that's laid over top a quadrant, that's one way to find them as well, right? The ones that are going to sincerely work. Higher time frame quadrants of a wick that price is trading into on that lower time frame at the right time, right? Within a macro, within the kill zone. So there's context, right? That makes this stuff really effective. It's not just patterns for pattern's sake. I hope that I did a reasonable job of kind of highlighting like a basic visual of what the context could look like, right? Like if prices were tracing higher to an order block after it was displacing to go lower on the daily chart, when it hits that order block, if you could then see a breaker from that higher time frame point of interest that gives you the opportunity to see a reaction, in that area is where you want to find your ideas, right? And then, of course, there's a lot of different pieces of context that can be utilized, all right? Not all of them are used all at once, but it depends on what's happening in the chart, right? Like this wick in here on this daily chart. On this candle here, when it's moving lower, if I'm on the lower time frame looking for a fair value gap, I measure out that wick, right? If my target's that low or these lows, if I want to find a fair value gap in here, say I'm in New York session, it's kind of looking like it wants to go through it. If I could find a PD array, not only fair value gaps, but any PD arrays that form at these wick quadrants from the daily chart, if you could find them laying over top of one and you are already from the higher time frame thinking it's going to go lower and it's at the right time, that's a high probability area, a high probability PD array to take and be a part of if it aligns with your model as well. It can't just be random PD arrays. You got to focus in on one at a time. But this is part of the selection process with PD arrays. Also, you want to find stop runs happening before you look for an idea as well. Why are stop runs so significant? Why is every model that I use, aside from two, including a stop run, right? Why do I like that stuff when it happens? Because a stop run tells you when there's a stop run and a reaction away, and especially if it's at a higher time frame PD array, that tells you that counterparty has now been put into the market. And if I'm bearish, I want to see that, because now when I start seeing price push away, unless that stop run high gets taken out, I'm continuously going to look to go lower. A stop run, what did I say earlier? What kind of liquidity is this? If it takes stops, drops lower, and then tries to take this out again, what kind of liquidity is that? High resistance or low resistance? Let me know in the chat. Appreciate y'all sticking with me this long. Hopefully you've been getting value. Okay, don't forget to like the video. Yeah, exactly. High resistance, Maddie. Good job. Why? Can you explain why? Why would this be high resistance versus something like this that takes the stops first and it creates a failure swing? Right? Why is this high resistance? Why is this low resistance? if it was going to continue that way. It's very important to understand these things and the why behind them. You know, theory is one thing, understand the theory, but why is that theory effective? Right? What makes it effective? Why does it make sense? Very important. Because where the high's already been taken from, it takes previous high, but not closed above it. See, the closures have nothing to really do with it. Well, I guess they do. If it wicks above it and closes below, that's a very significant factor. Same thing with like other PD arrays as well. But why is this stop run high resistance? The closure below it, you know, you are onto something there. The closure below after a stop run, that's another key indication that that high is not going to get retested again. And that stop run is efficient. It's enough. It's not going to have to come back. But what's the difference between this stop run and the failure swing, right? One takes liquidity. One has engineered liquidity, right? Because this one has, you know, potentially already engineered liquidity up there. This engineers a stop run through it to trigger in counterparty and then breaks down. And then we change state and then it's off to the races, right? If price runs up like this, creates a failure swing, breaks down, and then takes this out, it's already engineered low resistance liquidity. Why? Because it's a failure swing. That means that orders are still resting above there versus this example where stops have already been taken, especially if it's coupled with a change in state, or like Maddie said, if the stop run leads to multiple closures below the initial high that was taken out, right? That's a key indication right there, a key point. Right, when you get a stop run like this, okay, if you get the wick through it and a closure below that high that was just taken from, you know, this stop run here, that's significant. What are you looking for when it does that? Well, if you're bearish, you're looking for a change in state of delivery. This actually created a rejection block here too at the high. So if we had a wick that shot up into there, that's an entry opportunity, because we're at a higher time frame context as well. Does that make sense? So you see how things start to dovetail together. They lay on top of one another. And the precision's insane. And for some people, this isn't going to be for them, right? They're not going to be able to want to see it like this. And that's fine. There's some idiot on social media that'll give you some crap that doesn't work, that maybe sounds good, but, you know, isn't profitable, and they don't prove it. You know, nothing worth having comes too easily. You know, success is not built overnight. And being a professional in an industry where you're meant to lose, you shouldn't expect it to be a walk in the park at first. Now, I try to make it as simple as possible to understand these complex situations, right? I've been mentored by a couple of people, you know, 2 ICT traders that have, you know, 30 years together experience. And then, of course, ICT himself on a one-on-one basis with these other mentors I was able to work with. They were with ICT since baby pips, right? Some people that have been around his camp for, well, since the beginning, before he had a mentorship. You know, so a lot of the perspectives you'll get, it's going to come from all that stuff combined. But, you know, a lot of the stuff, you know, people miss when ICT himself is talking about it, because maybe he didn't communicate it in a simplistic manner. You know, I try to not take away from anything that he teaches, but I try to drive home the key points that maybe was missed. There's points that I know I missed until somebody sat down and did what I do with you guys, right? And then I was like, oh, that's what he meant. Okay, now it makes more sense, you know? So it was there the whole time. The way that I think about things and learn just didn't resonate with the way that it was taught, right? But, you know, still want to be able to take away the main points, right? So hopefully you guys understood that in there, okay? Yeah, brings in retail. Exactly, Empire, exactly. So that's the whole point. And that's as simple as you can make high resistance and low resistance. right? Consolidation, right? If it breaks through and you're looking for it to go up, that's high resistance. Why? Because it's back and forth, buy side and sell side. If you have a stop run that you look to see price go through these highs, that's high resistance, right? Market maker buy model though, but still high resistance. It may slowly try to get up there instead of just quickly getting up there. When it has this, it's high resistance. If you have a failure swing, whoops. Oh my God. Failure swing, it's engineering liquidity, especially if there's another high up here that's right above it. Right, that's layered liquidity. Beautiful liquidity. You see a change in state, it should fly, right? I mean, you could keep high resistance and low resistance understanding. That's simple. People try to overcomplicate everything. They try to use every concept in every moment of every day and every price swing. That's not what you should be doing. And that comes from not understanding what's going on, right? By trying to apply everything. You'll learn that you simplify things over time, but you need to understand the concepts. You need to be exposed to the different components to the machine so you can understand how the machine operates in a simplistic way. You can't just jump in, learn computer coding and simply code anything and everything that you want. You have to slowly work your way up, and then eventually it becomes like nothing, like second nature to you. That's what your goal should be. It should be unconscious. When you come into the market, unconsciously, you're already making decisions. When I look at a chart, I instantaneously know within 5 minutes what I want to do. It's because I've been doing this for so long. It used to take me days to figure out what I believe price is going to do, if I figured it out at all, right? And many times in the beginning, I didn't know what the hell I was doing. I was just winging it, losing all my money, as all of us do in the very beginning. Come in with crazy expectations, think it's going to be a walk in the park. Look at this guy. He pushed a button and he's living on a beach for whatever reason, never at home, right? When in reality, these people are lying. You don't want to sit there and trade on the beach. Unless you have a lot of experience, then you can do that. But why do that? Why not enjoy the beach? Okay, go trade and then enjoy the beach. Why bring work to fun things? This is work at the end of the day. At least, you should aim to have it as such. It's fun, but not so much fun that I don't want to enjoy myself. I want to carry it with me like I'm in a jail cell, connected with a ball and chain to the computer or my phone, not able to enjoy things. It's not why we all started trading. We started trading to be able to make money. Not that I promise that you'll make money. I can't guarantee any of that. I'm not a financial advisor. This ain't financial advice. But the stuff does work. So possibility is there if you follow the rules and do what you need to do. Study. Take this as serious as it should be taken. Eventually you'll arrive and be able to simplify. And I'm here to help you simplify from your studies to what you're doing on a day-to-day basis. I gave you a whole layout, whole outline of what to do every Sunday and how I determine what I think price is going to do, right? And we do the same thing every week. And guess what? Every week it seems to listen and dance to the music we want to hear it play, right? It runs the plays that we call for whatever reason. Not perfect. Sometimes we consolidate and have to wait. But, for the most part, when we point, it seems that the market likes to shoot. So that's proven by all the live calls in the last 2.5 years publicly, last 5.5 privately. Right? And this year will be my 7th year. Got a tattoo. Oh, nice. Okay. Sounds good, brother. Yeah, hit me up if you need anything, bro. I'll be around later. I appreciate you hopping on as always, bro. Hope you have a good Sunday. For sure, I'll hit you up. But yeah, so with that stuff being said, hopefully you guys got some value from what we just talked about. But yeah, so this is what I believe is going to happen. Right? I think that we're going to end up going lower. I'd like to see if we can get this failure. If we do get that failure, we're now in a market maker sell model. I'd like to see this asset, GBP, look to try to go lower. We do have high resistance in here. Now, once price drops down a little bit, if we get a retracement off of that, because this is high resistance, it's a stop run. I wouldn't be surprised if we drop down. We don't fly through that low. I wouldn't be surprised if we drop down, give a reasonable sized retracement. That then turns this high resistance to now a failure swing. Instead of a stop run being used, it now turns into a low resistance failure swing. And then if we can get price to break through that level, it's going to be off to the races and we'll target that low. So that's what I will be paying attention to for this asset, okay? So that about does it for the currencies. If you guys got any questions, let me know. But that being said, we're going to move on to the indices. So let me clean this up a little bit. Let me actually go to all three indices real quick. Why's it got the exclamation mark? Oh, whoops. Yes, okay, yeah. There we go. So let me clean up some of this. Oh, shit. I just moved and my whole desk started shaking. What the hell? The thing just shook the camera, too. You probably saw that, huh? Sheesh. That was dangerous. But yeah, so go to the weekly chart. Let's go get a little bit further details. Let's go to the monthly chart. Let's go remind ourselves what we've done this whole month. So I literally talked about the midpoint of this wick. I said if we can break through that, we're going to target this low and this fair value gap. We got down below that, and I was calling for lower prices up to this wick, or up down to this wick low, and then also into this fair value gap in here. So we have a deeper target, which is down in here. We saw it on the monthly chart. So again, like I said, we have, like I said earlier, we do have this fair value gap, right? So something similar that we talked about earlier. We have the buy side here, drag that over. All of this is already balanced. So we got sell side, buy side delivery. This piece does not have sell side delivery. So for them to go down into that, it makes sense because they have to balance out that price delivery, right? So I wouldn't be surprised. We have a wick with displacement. So I'm definitely going to be monitoring the lower 25% of this wick in here. If we do get a retracement higher, I'd like to see what happens within that lower part of the wick, because we do have this lower level here. If we continue to see rallying dollar, if they try to hike interest rates, that'll be the really solid catalyst in 3 days for them to want to get down to here. So we got to see what they're going to say, right? But this seems like it's logical, right? If we continue with what we see so far. And then of course we have for this, got that little gap in there. On the S&P, that's lacking sell side delivery. It's got a little bit here with this wick, but still have this that's missing. We used the whole little area though. I'm going to keep tabs on this wick too. So we actually have S&T at the lows. So this low has been taken. Let me take some of that off. We have lower low on the NASDAQ. This is caused, in my opinion, by tech, right? Tech has been taking a dump because they've emptied out a lot of their money to try to increase data centers. They're hitting a bottleneck. So that news has cut into their cash reserves dramatically. Go look at Oracle. Look at some of the headlines. So they've been drained. A lot of them have been drained. So it's pulling from their profitable cash flow, right? Their cash reserves. So that's as a result. Plus the war. I mean, there's so many things hitting the market. So we'll see how that stuff unfolds, right? We'll see what happens. But below this low, I've taken it out. I'd watch to see how the lower 25% of that wick is treated. Let's actually just put that as a reference. Keep it on the chart for future reference. Okay. So I'll just keep that there. So price has gravitated and fulfilled our whole entire objective that we've been calling for weeks, right? All the way down to the monthly target. Okay, so we're at the end of the month as well. So our expectation for this week is not going to be too crazy. It's the end of the month. We may get this monthly candle because it's been so aggressive to, in fact, try to pull back into that monthly wick 25% level to cap the monthly candle, the monthly range, right? It has to create a wick. It doesn't have to, but we hit a PD array here, so it's got a probability of us presenting a slight retracement, right? 20, 25% of the range, maybe 30 if it gets real excited. We have S&T at the lows, like I mentioned, so that could be a catalyst for price to bounce a little bit. So the underpinning of what price is doing so far, right? We got to keep that in mind as a possibility. All right. That's actually a monthly wick. Oh wait, monthly. Make that the right view. Okay, so we've tagged that, and we got that lower level down there, that wick. Look at the wick too, right? Remember what I said about the higher time frame wick quadrants? How when you can layer a PD array over top of one of them, when you drop down to a lower time frame, the daily is a lower time frame to the monthly, correct? So the daily bearish order block laid over top this monthly lower 25% of the quadrant of the wick, that thing was effective. Look at it. It broke down below it, and what happened? It was trustworthy as it went to the target. So this is a good example of what I'm talking about on a larger scale, larger perspective. Same thing's true if you're measuring out a range, right? If you measure out a high to low, like a range, you're measuring the range, right? Grading the price swing, high to low extremes, 25, 50, 75%. If you can get PD arrays to form in those as well, they're pretty effective, right? Good selection. This order block is in the upper 25%. What happened? Price came up into it, respected it, and dropped. This breaker is laid over top 50%, right? What happened? That's also equilibrium. So what happened? It respected it, and then we dropped. Then we got the lower 25% of that dealing range there, which again is part of that big wick. Lower 25%, it came up into it. Market maker sell model, okay? Second stage distribution. How do you know that was what it was? The speed in which price used to get out of that range or out of that lower 25% targeting the PD array. Okay, so now that we're below this area in here, I want to see how price is going to treat this area. We have a wick with displacement. So I'd really like to see what the odds are for price to come down to 27,875 level or the 28,000 level. It's a pretty nice target too. Okay, looks pretty nice to me. Extend that to the right. Again, if the dollar keeps going higher, then we'll see this thing look to continue to go lower. Where are our 3 PD arrays here that tell us we are in line with a bullish trend, and the SMT at the lows is now going to potentially start pushing us higher? Well, we first of all got to see the dollar break down. Otherwise, the S&P is probably going to come and target this. The S&P is still somewhat in a range. The Nasdaq's the only one that got out of that low extreme of the sideways range that it's been in. I guess you could say that the Dow has too. The Dow's got these equal lows with this gap down here. That is a beautiful thing to look to target. We're retracing into this order block. I believe that we should be able to hold as long as we keep a closure below the midpoint of this order block and this volume imbalance. Right, notice the wick right there, that big wick with displacement. Notice how it closed right at the 50% of the wick. You know, it must be random. Must be lucky, huh? We must be getting real lucky with what we identify in the market. But yeah, as long as that remains, we also got this low to that high. That's also a BPR if it's going to go lower. That's what a breaker and an order block are when they're fulfilled and engaged. They're being treated as BPRs, a variation of balanced price ranges. Same thing with inversion fair value gaps. Right? It's the same thing. And if they fail, and they go the other way. Simple as that. But yeah, so we targeted this last week, actually. Price went right to it. So those equal lows are there. Now we got these equal lows here that have now been engineered right above this little gap in there. Okay, so volume imbalance, relative equal lows. We do have S&T, so we do got to keep that on our mind. Whoops. Let's see. So yeah, we're definitely going to keep that in mind. Just observe it as an observation. But otherwise, right, if we get a retracement into this and it continues to drop, I'm going to anticipate if we see dollar and all these things promoting this continuing to go lower, currencies going lower, dollars going higher, you know, all these different components to the analysis showing that this should go lower. We're going to keep that in mind, right? But if this SMT holds and we start to break beyond the midpoint here, then we're going to have to put sell side on the back burner for a minute. But again, until that proves it's something to be concerned about with this going higher, we're not going to worry about it. Any return higher is just to retrace into a PD array up here. We have sell side, wick, order block, breakdown. That should be a BPR. So lower 25% is what I would prefer to see price hold inside of. If it wants to come back to the 50, that's great, but we don't want to see any of this really be too much of a problem to us. Okay. Let me see. Yeah, what's up, Silent? Give this kind of level of analysis while trading live with the group. Hey, you're the right train streamer. Hey, I appreciate that, bro. This is like the first call you've been on, right? And you have that opinion. That's awesome, bro. I appreciate it. I'm glad you're getting value and kind of see. There's not a lot of people that have the depth that we do. It becomes blatantly obvious. At least I would assume. So it always hits me when students hop on and then they have that opinion very quickly. Yeah, let me prove it to you, bro. Put me to the test. Don't just blindly trust people, including me, right? I obviously trust myself and think what I do is better than most. But I don't want you to have that type of habit, you know. And hopefully you find a home here and you don't feel you have to look at other things outside of ICT's concepts, or ICT me and maybe, you know, one or two other people that you like to hang out with, because too many perspectives can be a problem, you know, because not all ICT traders trade the same. We got the same access to the same weapons, same concepts. A lot of stuff overlaps, but people have different styles, you know what I mean? And people sometimes like using other things, you know, different than others. And you don't want to be pulled in too many directions. But again, I appreciate you saying that. I appreciate that opinion, sincerely. So I'm glad to have you here. Let me see. Sounds like, could you explain this SMT? What and where is it? Same here. I'm analyzing, doing forecast, but you helping me more. Still can't do forecast. Yeah, it's okay. You screenshotted this thing, right? You screenshotted this? Have you screenshotted this? Everything that I go over, you want to make sure you take a lot of notes. This is why hopping on, getting bias. I'm not saying this is you, but people hop on, get the bias, or because I'm not telling them, they hop off, right? Because I make you guys wait because I have a lot of stuff to talk about. And this is a process, right? A lot of people hop on, try to find me saying bullish or bearish. They decide, they see it works, and then they get this false sense of clarity because they're borrowing my opinion. And it's like, it's not helpful because the different components aren't being utilized. They're not being identified. That, you know, the things that I'm explaining that help me have that opinion for whatever I'm talking about, what gets me to those opinions is the most important, not what the opinion is, right? What the opinion is, I mean, that's important, but how I get there, what do we look at? What are we identifying? What are we talking about that gets us to that opinion? That's the most important. What levels am I identifying over others? Why am I focusing on these specific PD arrays and not others? You know, those are the most important questions. So if you ever catch yourselves, this goes for all of you, right? If you catch yourselves hopping on and then just kind of leaning more towards what my opinion is, bullish or bearish, you know, and that's all you're really taking away, and then you're watching it and it's working out and you're excited, you want to start gravitating more towards, okay, well, why is he looking at certain things? What is he looking at that makes him decide what he's deciding? You know, because this stuff, it works a lot. And it's not because I just assume what direction it's going to go and I'm correct. There's a method. We're building the narrative. You know, every asset we look at has a role to play in this analysis for the indices, because it's what I trade, right? If the bonds and yields, dollar, and the currencies had no value to a decision I'm going to make in the NASDAQ, I would not be looking at them, right? I would not be wasting my time on them. I would just look at the NASDAQ itself, right? Or, you know, just the three indices themselves, right? But there's a depth of knowledge. There's a connectivity, a connected feeling behind all the markets, at least the ones that I'm looking at, because they directly affect the NASDAQ and the indices, because it's all connected. It's a machine that works hand in hand together, right? So just a reminder, mind you, I'm not aiming at any of you with what I just mentioned, but just a reminder. I know I get a lot of people that watch the replays and whatnot, so I hope that's an acceptable perspective that students can adjust to. You know, because a lot of times people are too lazy. You know, they just don't have, or they just don't have time, right? And so they're just looking for, you know, someone that's accurate that they can piggyback on and be able to at least participate in the market, even though they don't have enough time. And I know there's a lane for that. But I encourage you guys to really learn. You know, even if you're really busy, you could look at a daily chart, monthly chart, weekly chart. You can find 30, 40 minutes a day. You know, don't watch a TV show, right? On your lunch break, you know, look at a tablet or something. You know, look at some of these different components, right? Obviously, it's going to take a lot of time if that's your only time you have, but you know, over time you'll be able to get there. I help swing traders, I help day traders, scalpers. I have many students. I've helped many different perspectives because it's that universal. That's proof that it's universal. Everything that I use, everything that ICT teaches, it can be transferred to every asset, every style of trading. You can trade options with this type of stuff. You have to understand, you know, the ins and outs of options. It's a little bit different. You can't just go off a direction. You have to have other things too, right? But direction is like 80% of the battle, you know? So, and everything we do here on these Sunday calls is aimed at getting you to understand direction and the framework, you know? So yeah, Silent, if you like options, bro, you know, I've another guy that I listen to, amazing guy. Not everyone's cup of tea, but I've gotten a lot of advice from him when it comes to long-term investing and options, or at least the basics of things, right? This guy named the Wall Street Trapper, I would look him up if I was you. If you want to learn about options, if you're trying to day trade futures, there's nothing better than ICT. It's not worth wasting your time. But if you're trying to long-term invest, ICT doesn't teach that. He actually teaches against that. He said, don't do it, right? That's advice I'm not taking. I've done pretty nicely. I believe that the stock market will be here. So what's the point of me not participating? Using every vehicle I can to make money in this one skill set. You know, why not? Why not trade options? Why not, you know, swing trade? Why not do these other things? You know, why not? Why be one dimensional? At first you want to be one dimensional because you can't be all over the place. It's too much to learn. It's a lot. It is. You know, I'll be the first to admit, you know, I've been doing this for 7 years in August. It's been a lot of work. It's fucking hard, difficult. And on top of that, it's hard to find people to listen to. That's what made me want to make content, made me want to, you know, go public and be around people that are trying to learn because I needed what I do. I needed it terribly. You know, I needed someone that was there that's willing to listen, to sit on live calls and talk to me, you know, answer my questions if they can. It was really difficult. I had to spend $12,000 to find someone who would listen, $6,000 each. It was some of the best money I ever spent, aside from what I had to pay for ICT, and everything's on the internet now. So, but this stuff's hard, you know what I mean? And I hope that, you know, you're now seeing you're in a community that understands that hardship, you know, and I definitely try to give you the value, you know what I mean? So I hope you guys have been getting value. And I'm going to continue to spray you guys down with it, right? So just got to stick around, right? Yeah, that's the thing. You're right. Yeah. I'm here listening since I found your channel. I'm happy. I'm glad, Silent. I appreciate your, the support. Appreciate the interest. You know what I mean? But you did while learning that era. Yeah. Keeping hard and expensive information, but yeah, I wouldn't go back and change anything about what I've done. You know what I mean? I wouldn't go back and change any of the thousands of dollars that I lost, because without that, I was very stubborn when I was younger. You know, just a stubborn person in general. You know, I don't like listening to people tell me what to do. So I had to change that about myself when it comes to this, at least. You know, and I'm glad I did. You know, trading's changed a lot about me as the person. You're going to be forced to change. You know, things that don't serve you, you're going to have to identify them and get them the hell out of here. You know, you can't be undisciplined. You can't be lazy. You can't be, you know, a slob when it comes to what you eat, how you live your life. Like, your life has to reflect the type of trader you're trying to be. And if that's a disciplined, effective trader that's, you know, organized, who's going to aim to be profitable and rich and successful, you have to live your life like you are that person. because how you live your life will bleed into the decisions you make. If you're reckless with your money in real life, you get your check and you blow it on stupid shit, partying all the time, you're going to come into the market like a reckless gambler and lose your ass. The market's going to tell you this ain't the place for that. And it's true for many other flaws that us as human beings have as well. It'll manifest in some way. If you're impatient, if you lack discipline, right, you're going to overtrade and over leverage. You'll have a streak and give it back. You'll make money and give it back. And if you don't change that in your real life, it's going to keep manifesting because you're not consistent. Your life that you live is not consistent with who you are as a trader. You have to align them both, and that takes a lot of time. And this is outside of the technicals, mind you. It has nothing to do with a candlestick chart. This has to do with psychological warfare, like the things that are going on between your ears. I had a lot of stuff I had to change. It's an active process of growth. You never fully arrive in that instance. Because that's life. Life is a journey of personal development, accomplishment, praising God, first of all. It's purpose why I think we're here anyway, to help your fellow man or woman, so your life has to reflect these things that you're trying to be in trading. At least that's my opinion, right? Let me see. We do let me see. That's what I start. Yeah, I wouldn't start with options. Highly not the best stuff. Highly recommend that's not the first thing you do. Oh man, it'd be brutal. Because oh man, there's just too much to learn. Futures is forgiving, somewhat. There's so many great approaches. Don't necessarily require you to change your actual strategy. I just took my options trading. Yeah, 100%. If you traded options before and now you merge ICT's concepts for like direction and framework, what you believe the chart's going to do, and then you go with the specific options things like time decay and theta and beta and all that stuff, you get to understand those Greeks and all the different fundamentals for options. It supercharges it, like you said. I 100% agree with that. 100%. The options is tough. It's definitely tough. But when you understand where price is going to go, it makes it a little bit better, a little easier. And if you're only buying calls and buying puts, you're never shorting the market, you could cap your losses. And it can only take so much from you, rather than having an unlimited floor. Could just break the bottom of, just go to absolute negative, totally wreck you. Yeah, we're getting into options a little bit in this community. I'm building up my whole process around it. I've already shared part of it to my private group. So we're going to start talking about them a lot more. I told everyone that I'm going to mess with options full force for like 6 to 8 months, maybe even a year, before I want to talk about it with everyone. Again, it's all the same. It's just there's a little bit of other things that have to be in alignment with options. So you got to understand the basics, right? And I never traded options. So I'm just taking my futures understanding because we're highly effective. So why not, since we can call these big swings, why not take swing options? That's what I'm going to do. I'm not going to do day trading options. I'll leave that to my futures trading. But maybe a couple times a year, I'll send out a couple options plays in the private group as a perk. Maybe I'll talk about it here too, depending on how I like it, if I like it. So far, I love it. It's amazing. Options is amazing. The upside is ridiculous, but it takes a little bit of time like anything else. But yeah, welcome, Different Cloth, bro. Welcome. Appreciate you hopping on, hearing what we have to say. Let's see. The mindset you have now and no, is a version of itself. If that version wasn't the way. No, I agree with that, bro. I agree, Silent, 100%. That's why I wouldn't want to go back on it. You know what I mean? I would never change a dollar that I missed or a dollar that I lost, a dollar I wasted on fake mentors. All of it has allowed me to be where I'm at today and have the perspective on the market that I have today. And you get perspective through hardship a lot of times. Some of the best perspective. We don't get it just by having good times all the time, you know? And you got to have a will to not quit. You know, I think life has thrown it more at me than trading can ever throw at me. So I guess that helps a little bit, but it also brings bad habits with it. Having, you know, a hard childhood and stuff like that. It brings stubbornness. It brings self-doubt, right? Depending on what happened. And there's so many things. So you got to be acknowledging of these things and think about your life, right? Like, what have you been through that has created you, the person today? If you're making a lot of mistakes, you know, you want to definitely take a trip down this this lane for a little while. I have things in my private group, different prompts that I give my students to go through with ChatGPT to really do digging. And of course, you know, I hop on with them too. We talk about things, but there's ways to leverage AI to help you do this stuff. You know, especially if you don't like therapy and all that. Therapy doesn't really help everybody, but some people it does. But I've developed a system. One of my mentors gave me a prompt that he created, and I liked it, so I shared it with you guys. And then I created my own, you know, based on things that I've done to help myself overcome things. And you know, I've worked with trading psychologists. I have one in particular that I really like. I'm gonna shout him out again. His name's Trading Composure on Instagram. I think he's on YouTube too. But I highly encourage you guys to go look at what he has to offer. And if you don't, you know, choose to work with him like I did, you know, you could just use his content. His content's magnificent. You know, he has the proper perspective. He's an actual trader. He doesn't trade ICT, but he's traded for, I think, 20 years at this point or more. So he's got a lot of skin in the game. He's a trading psychologist who actually trades, unlike a lot of these psychologists who go from psychology to then try to be around traders because there's money to be made and a lot of problems. You know, those are they're just taking advantage of us. A lot of them. But yeah, so you know, we'll see what happens with these assets. If everything's going to continue to do in terms of the relationships, if everything's going to continue with what it's doing, promoting lower indices, we'll see what happens on the 29th, because that'll really drive home the point. If we're going to go lower because of interest rates, if they hike them, it's going to mean something. If they cut them, it's going to mean something. Hiking means bearishness. Cutting means bullishness for the most part. The last 24 times they've cut rates had a bullish move by the end of the 12 months, by the way. That's how you know there's a heavy impact around these interest rate markets. You know, the same statistic can be said about hiking interest rates, right? Give or take maybe, you know, a handful that didn't do it. But that's an undertone, right? Just like seasonality. You know, it's not a be-all end-all, but it's a highly influential piece of information to go off of. So you want to keep that stuff in your bag of tricks, right? Keep it in your arsenal. But yeah, we'll see what happens with this, right? So we're at the low of this market maker sell model completed. It's a balanced price range. We got a bearish order block, the wick. I'd like to see us open up, create power 3 bearish, and then look to try to fill in the rest of this monthly fair value gap. And then if we blow past that, we have the deeper level down here as well, like I said. But at the beginning of the week, it's not unheard of for them to want to rally up a little bit. You know, especially if we see the dollar open up, maybe decline once more, maybe a little bit more, as it looks to try to get up to this monthly fair value gap. Isn't it ironic? The monthly fair value gap on the daily on the DXY is being targeted higher, while the monthly fair value gap on the NASDAQ is being targeted going lower. It's very interesting, right? So I think that that'll continue. And as long as we see the bonds go lower still and do this, and the yields continue to go higher, we'll keep that opinion. You know, same thing with this. It'll go lower, and this should go lower, while the dollar goes higher, indices go lower. yields go higher, bonds go lower. So all of that stuff is the risk on, risk off overview. Short and sweet, right to the point after all this work that we did to decide that. So that'll be my opinion. Right? That'll be what we'll go off of as we go through the week. Both on Tuesday, right, for here on YouTube, and then every day in my private group. So let's get to some questions before we head out. Not letting y'all go yet. Let me see. Ashley SUV, or Ashley's UV. Appreciate you saying that. Yeah, man, I did a really big mistake now. Other things got me panic and freak out, but so whatever should not put me in. Yeah, no, if you ever make mistakes, don't ever let yourself spiral into negativity. What's the point? It's already a negative circumstance. Why approach a negative circumstance negatively? Right? It compounds the negativity. When you go through something negative, you got to think positively. Like, okay, what can I learn from this? Now, I may have made a stupid mistake too. It may have been the dumbest thing you've ever done. Well, I'm learning. I'm trying to learn. I'm not perfect. I got to give myself some grace, and I'm still trying to learn. I'm still trying to be better every day, and I will be, and I'm going to continue to be. So that's something to be happy about and proud of. And just try your best to set rules around those mistakes so you can slowly but surely stop making those mistakes. But you should never look at something negative from a negative light. You should always try to turn it into a positive. If you take a loss, breaking your rules, good. Because now, guess what? That tells us why we need to follow our rules. So it's a positive, right? The good method. When you look at negative stuff, think good. Now I got something else I could learn. Good, I have the opportunity to learn. Because if I knew everything, I wouldn't have to learn. And, what is life if there's nothing to learn, right? Let me see. Just stand and learn from anyone sharing any advice. Okay, I would watch that. I would kind of tighten that up a little bit. Finding anyone that's sharing, you got to vet them, brother. Like I said earlier, don't just let anyone into your head, right? So we don't want a lot of people to dictate how we think. If we let anyone and everybody into our mind, just because they're online sharing, they have to prove it. Make them prove it. I prove it every day for the last 2.5 years here on YouTube. Every single week I'm live showing you guys, and it works out every week. Give or take a handful of times. And from those in my private group, I'm live every single day. Every day. I can't remember the last time I missed one day outside of Saturdays, because I have, a lot of one-on-ones on those days. But outside of that, I'm live every freaking day. If I'm not here on YouTube, which my private group students get to watch too, I'm live with them, or I'm talking to somebody, I'm doing something every day related to trading. Constantly. It's my life, and I wouldn't have it any other way, to be so honest with you. But, make them prove it to you, anyone that you listen to. Don't let people just wander into your mind because they sound good, or they have a car you like, or they have a house that you think they own. These people are full of shit. And most of the time it's not from trading. I do everything from trading. I have a private group, but it's tiny, purposely. Okay. But, I kind of like it that way. But maybe it gets bigger at some point. It's going to have a limit. I'm only going to allow maximum like 100 people in there at some point. If it gets to that point, great. If not, and it stays more exclusive like it is, because they're all serious traders who are really trying to make this work, so be it. And then everyone else can be helped on YouTube. But regardless, we're going to have an impact. But my money comes from trading. Okay. You need to have a filter when you're on the internet. There's a lot of crazy idiots on social media who don't value things. And in order for you to filter out so you get the right people, sometimes you got to put a wall up. And it's unfortunate, but it is what it is. Nobody has a limit on their private groups, by the way. It's another thing that only we have, right? Because trading is the main income. That's how it should be. And if they don't, if trading's not their main income, they're not really, full-time traders. They can't claim they're full-time. If majority, I'd say 80 to 90% of your stuff is paid for, if it's not paid for through your trading, you have no room to say you're a full-time trader at all. Like zero credibility. But it's the internet, right? That's my opinion. I got that from ICT as well, and I totally agree. And there's not many of those people. There's really not. But hey. But yeah, people like Jade Cap, I'm sure he makes a lot of money from his $10,000+ service, which, more power to him. That's a heavy filter. That's like nobody's getting in unless you have lots of money to just hand. I think it's worth it. I invested in someone just like him, 2 different people, but they weren't 10,000, but they were just like his results, making lots of money, proven, and they were willing to work with me on a one-on-one basis. So not everyone is a scammer. Not everyone is not worth even considering if they have a service or, charge, because, they're trying to have a filter process. Not all those people are bad people. You shouldn't scoff at everybody that has a community that they've tried to protect and maintain the quality over, right? Most of them, yeah, they're pieces of shit. I could literally sit here and name off a bunch that are really big, that I have students that joined their stuff before they came to me and have brought back intelligence saying that these people don't know what the fuck they're doing. They look like they know, but they don't know anything. They're horrible. They're nothing like they claim they are on social media with the screenshots that they take screenshots of. I'm not going to put them on blast. Maybe at some point I will. But, I don't like drama. Maybe I will, though. Who knows? Just wait and see. We'll see. But yeah. So vet everybody that you listen to. Don't just let anyone in your head. Right? I don't think that's probably what you meant, but I just wanted to mention that. Because I know we've all had our experiences with these losers. Because I said, yeah, okay, for sure, Silent. I kind of figured. What they give, you're not sure. Yeah. Of course, what I take, I should check what I need to use. Yeah, exactly. Yeah, you always want to test it out. But yeah, jack of all trades is a master of none. Yeah, I agree, bro. Oftentimes better than a master of one. Interesting. I don't think I've ever heard that. But oftentimes better than a master of one. A jack of all trades is a master of none, but oftentimes better than a master of one. That's like smashing a jack of all trades, but a master of none. I've never heard that. That's a good like reverse Uno card right there. That's all they did. In trading, you want to be a master of one at first. Because if you go in with the kitchen sink approach, you're done. You're never going to be able to make a decision. There's too many things, right? And you got to have that thing you can fall back on when times get rough. Like for me, that's the breaker, the market maker model and the breaker. Sorry about that. Totally missed your message up there, Mick. I'm from PST. Yeah, I'm in California. So we're like neighbors. My name's Christian. For those that don't know, appreciate you asking, by the way. Or Chris, right? Oh, what's up, Axe, bro? What's up, bro? I want you to watch the whole video. Just watch the video from the beginning when you get a chance to. But I'm not sure how long you've been here. hopefully you've been able to be here for a little while. But yeah, so I think this about wraps it up, you guys. We talked about so much stuff. We went through the whole market that we like to look at, all the different things. Talked about many different characteristics. Talked about market maker models, Power Three. I mean, we talked about balanced price ranges. We talked about so much stuff, and I think you guys will get a lot of value from it. Those of you that maybe hopped on a little bit late, so just spend some time digging through. We had a little bit of a conversation towards the end here. Um, but there's a lot of value just within the first hour of this call. It's a lot of value. So if you hopped on late, I encourage you to rewatch it. If you have any questions, definitely let me know. Just follow me on Instagram. If you guys are interested in my private group, I got links in the description, and I also got the QR code up at the top of the screen if you want to scan that, or you could just hit me up and DM me and we can have a conversation. But if that's not something you're interested in, that's fine. I appreciate the love and support here on YouTube, and I hope you guys get ridiculous amounts of value, because that's my goal, right? My goal is to give you guys as much as I can, and help you and help the serious traders as much as I can, right? And if that's you, this is a place for you, right? And I hope you found a home here and continue to get value with us. But as long as you show up every day that we're live, if you're in my private group, if you show up every day, I think that, things are life changing. And you can just ask some of the students that are in the chat right now. They have no reason to lie for me. If I was full of shit and just a vibe, okay, and my trading didn't speak louder than anything else, anything I say, they really have no reason to be here, because there's other people that are louder than me, that are more entertaining than me, but they can't trade better than me. A lot of them, that's for sure. And I prove it. So, yeah. So hopefully you guys got value. Thank you guys for the love and support. If you haven't liked the video yet, but you did get value, please like the video. Subscribe to the channel. It shows YouTube that what we do here is worth listening to. And yeah. So with that being said, hopefully you guys have a good rest of your weekend. I will be live here again on YouTube on Tuesday, at probably like 5:30 or 6:30, depends on how I feel. I know we have news at 7 a.m. I believe on that day, but I wouldn't mind hopping on and going through some stuff with you guys pre-market before the news event comes out, and kind of reflect on what's happened from today going into Tuesday. Maybe answer questions and stuff as well. Mick, I appreciate you saying that. Honestly, for being honest, I think so too. But hey, I'm not here to have an ego, right? You know what you're talking about very well. I appreciate you saying that, brother. I'm glad you think that. But yeah, so God bless all of you. Again, thank you for the love and support. It means a lot more than you know. Have a good rest of your weekend. And if you got questions, just hit me up on Instagram, on Discord, or, wherever else you could find me, right? So yeah, God bless, and I'll catch you all on Tuesday.